Hello, good morning, good morning. Looking for a buy here on gold if we break above these highs. Oh wait, no, actually I'm gonna wait. Nah, I'm gonna wait. For a second I was on FXCM. The FXCM chart's down. It's not live. So I gotta use Owanda. Hey, morning everybody. Hope y'all are doing well. We're ready here to smash a new week. So we're gonna do some analysis. I see the daily is already up 0.80%. There just seems to be a small gap on the daily time frame over there. So all systems good. All right, nice. We live? I think so. Okay. All right, chat. So I'm going to be waiting for a buy. If we can break. Yeah, if we can break above like 50.15 over here. So we do have a 5K psychological mark as well. Still kind of like holding within this area over here. So we got 5K. We just need to see little breaks of structure here to the upside. And I believe, we're going to have a good day here today. So we have clean range on the left-hand side too if we get above the zone. We're going to have like a pretty decent size move over here towards a 50.37. Like 220 pips. I think that is. This is Owanda. Let's see if FXCM is back live. This might come back live later on. This is quite confusing. Because it's the same daily, correct? It's the 9th today. Yeah, it's the 9th. But FXCM is stopped operating here at around, what time is this? 2:25? Shortly before London Open? That's kind of weird. That is a bit strange. So it's all good. I guess we're gonna use the... Yeah, it stopped like right here. So I guess we're just gonna use Owanda today. Want to see if we can break above these highs. If we can't, see, even the area is looking for the buy. It didn't break above that high. It just came up, kind of like flirted with that wick, and then it rolled over. So I'm waiting for a little bit more solid PA to execute on something, execute on a trade. Let's see what else we got. 5 minute right here. We got some few rejection wicks. We got 5,000 psychological. We got a potential reversal play right here as well. As you can see, we just broke below that support region. So price is kind of halting for now. It's kind of like holding this level. We got support. We got resistance right over here. And it's gearing up maybe for potential reversal, maybe continuation of the trend to the upside. The daily does look good to move up bullish. We kind of have a weird area with a lot of gaps on the daily time frame over there. But it looks like it's trying to break above that resistance, so it can continue moving it. This is why I like FXCM, because it doesn't have these like weird gaps. All right, so anyway, we see like prices trying to close above daily resistance over there. We just got a liquidity grab on the 5 minute as well right down over here. As you can see, we just took out these lows. So I'm waiting to use this reversal play here as a confluence to see if price can continue to move up bullish. I do believe I have my stop loss set correctly. This should be about 20 pips. Oh yeah, because of the decimal. Where the decimal here is placed. So I need to add an extra digit. So yeah, it should be about 20 pips. This should be about 2 pips. I can bring this down a bit more. Some of the sort. Gold likely range bound amid raft of US data. Just getting some fundamental work coming in. Now we have a range high right over here. Got our range high and we got our range low. So I want to see if that volume can really come through for us right now. We just got the new hourly candle open as well. Still fresh. Here comes the volume. Seems that we've been bearish on the Asia. The bearish on the Asia open. Five-minute is about to close here in a bit. It would actually be nicer if we could get a new 5-minute. All right. Let's see. I got stuck in here. All right, chat. I'm securing right over here. Beautiful trade. Let's go. Well done to everybody who caught this move here. Yes, sir. Good work, good work, good work. If you're gonna leave a runner, you have clean range for price to keep going up over here. Up towards resistance. So, you know, you can secure like 80% or whatever you want to do. But I'm going to take my profit over here. I'm going to take this, just secured around, just slightly above 1% right now. Slightly above 1%. But, you know, the idea is that price can continue to fill this range. You know, that's what we would like to see. We'd like to see, we don't know when it's going to do it. It could do it now. It could do it later. But this is going to be the zone that price can potentially fill this zone over here. Right, so W trade, guys. That pushed up about close to 30 pips. I secured around like maybe 23. Yeah, about 23 pips on that. Awesome. So it's good to see we're still getting quite nice volume here in the market as well. This is my first trade of the week. And let's continue to slaughter this week. Yeah, it looks like it might be fetching some orders there. I feel like it just came back to take out some previous wick lows. But that is the overall direction that we should be anticipating price to be heading towards. It's a little volatile. But, you know, that's what we got here today. So we got to, like, trade that, I guess. We got to get okay with trading our system. Even when we are fearful, we got to be okay with trading our system. You see, now it's pushing up quite nicely over here. It's up like 54 pips. 54 pips. It is going to be looking to clean up that range. It is going to be looking to mop this area up over here. So yeah, pretty much pretty straightforward trade. See, gold likely to range bound. Gold bulls gaining strength. Commodities intraday targets. We're going to need to go through some of this fundamentals over here. Man, it's just like there's a lot of volume in the market right now. Because we just got a 5-minute candle closure above resistance. and we just rebroke the previous candle highs over there. A little bit of a shotgun entry. As you can see off the shotgun play over here, it's up about 25 pips. And yeah, that's still playing out nicely. Because, you know, like when you're looking at price, you got to look at, see, what is the area of least resistance. You know, of least even with this ginormous 5-minute candle over here triggering positions in. Imagine we got triggered in with a candle that was already at 92 pips to push for an extra 30 pips. Candle was already 90 pips up. That was an hourly candlestick. But you know, like, what's the zone of least resistance? Yeah, we can see that that's for price to move up. And we've also seen this happen a lot in the past, where you got like that type of sort of like reversal area down over here. And that's kind of like a warning sign, you know, it's the market basically warning people that they should be managing their risk. You know, the sellers get insurance, but most of the time people are going to let their stop losses hit. It's just psychology of a trader typically. They don't accept losing trades, so they would rather not take their insurance, man. But the only place I would not take insurance is playing blackjack. Insurance is kind of a waste of money on blackjack, really. But in trading, you always got to take that insurance. So the sellers did get that insurance. It's whether they're going to choose to manage or not. But we are starting to push more towards the upside direction now. And I believe that's going to be the direction for the week up ahead. Nice way to start the day. I got it a bit lower. Oh, very nice. That was my setup there to order flow. Down for the day for 2 out of 3 at 60 pips and 1 out of 3. The trade closed at 85. Very well done, Ricardo. Yeah, I mean, pretty good. Looks like you're done for the day there. Looks like you are donezo. I'm gonna look for... Will I look for another trade? Maybe I'll look for another trade. We'll see. We're already up for the month here ridiculously. But you know what? I was checking up on that Fabio Valentino guy. He did my PNL He did my PNL in 9 months. This PNL over here where everyone was like, oh, we can't believe he got 338%. Man, the number one scalper in the world did 300 and he did 300 and something percent in 9 months. He did my PNL in 9 months. So it's all about like boundaries. Like, where do you set your boundaries? You know, a fish, you know, you can't be like a fish in a fishbowl. Fish in a fishbowl doesn't know there's anything outside the fishbowl. All right, let's see. I'm gonna do this. What time was a straight taken at 3? Up about 23.50% on the month. Still have around, how many more weeks do we got? About like 3 more weeks over here. Oh, we're gonna do some damage. We're already up 23%. But I don't think we're gonna beat January though. I think January was on steroids. January was literally like 45 trades. It's a good start, but let's see how it goes. Because you see the market conditions are slightly shifting as well. Right now. We're starting to maybe be a little bit more of that rangy feeling. Starting to like sip into a gold spot. That guy is amazing. What do you think of his approach? I think it's good. I think this is a trade he would also get involved in, but he would get involved using his deep charts, so that software for liquidity. So it will look cool for somebody who doesn't know how to trade. That's the whole thing as well. But I don't know if he uses it because he needs it or he uses it to sell his software. But you don't really need it, especially as a retail trader at a retail level. For me personally, I don't think those things are quite useful. But if a new guy comes into the market and sees something like that, they'll be quite impressed. And I understand why. It does look quite sophisticated and fancy. And if it does work out, it seems like that's a holy grail. And everyone's like, oh, I got to get this thing. It tells you the deep markets and the order flow and where Warren Buffett got into his positions. But in reality, man, I do the same thing he does, but I just don't use the order flow thing. It's just a confluence, if anything. The real source is in the price action. If you can't read candlesticks, I always say you cannot trade. You can't trade. That's all you get when you come into this market, are candlesticks. So let's focus on the foundation and let's master what the market is giving us. You know, let's not put some fugazi stuff on top and then call that PA. And let's just look at the candles. Let's see what it's doing. If it's doing liquidity grabs, pulling up, the volatility, directional biases, clean ranges, like all of these things, like they matter, you know. That's what the market is moving based off of. Price action. What's the current price? What's the current price in the market? And what's the current candlestick formations to give us a probability of one thing happening over the other, such as wick breaks, candle closes, and then all the other stuff's like extra, you know, like moving averages. And yeah. So that's the whole approach behind TFX concepts. It's just like, if, you know, they say when life gives you lemons, you make lemonade, right? So when life gives us candlesticks and price action, what do we make? We make profitable trades, I guess. So don't want to overcomplicate. Even a good lemonade, you don't overcomplicate. You know, put a bit of icing sugar in there, like, you know, pretty good, simple. Don't try and deconstruct and reconstruct the lemonade and then give it a fancy name, right? Nobody wants that on a hot day. We just want a fucking lemonade. Some ice cubes in there. Simple. Nice cold lemonade done properly. So yeah, this is it. Good lemonade over here. Very nice day. Good start into the week. We make TFX concepts. Yes, sir. More data is always good, but man, tough for me to make a decision with much info overload. Exactly. Like literally, I've come on stream with you guys since the weekend. I have not looked at the chart. I was literally on FXCM right now. I was wondering why the market was closed because FXCM broker is down. I've not done anything. I've literally just sat down with you, like, since I haven't seen the chart since last week, Thursday. And we just did the analysis and execution here well within, how many minutes was this? This is from 3 a.m. Well, I sat down here. I was still getting warmed up. So let's say we executed here about like 3 minutes. So literally, let's just say 5 minutes. In 5 minutes since last week, Thursday, I have fuck all idea of what my market's been doing. I just quickly glanced over the daily time frame. My execution points on the lower time frame. I'm not trading the daily. So most important to me is what's happening on the LTF. So the daily is a bit of a good idea to see where the overall volume, the bigger wave, is going towards. And then the LTF is to see where the confirmation is coming in from. All within 5 minutes. And we're done here within max time span of, let's just say, 6 minutes. 6 minutes. And that's it. Now we move over to the next trade and then we do the same thing. Most of my trades come in like within the first like 30 minutes. So yeah, this thing should be gearing up still towards upside. As I mentioned, it's gonna be looking to correct this range over here. The only other thing I would say is maybe like get a variable where like price does a liquidity grab right over here and candlesticks start to come down like this. But ideally that shouldn't be the case. Market shouldn't be doing that if it wants to continue moving upwards. I think the only times like situations like these happen is it could just be a fake out overall or a retracement to the upside. So we don't know, right? So that's a gray area. I don't know. So our window of opportunity comes in when we execute and when our first TPs get hit. That's when the variables are more in our control. Anything beyond that point is random market noise. So I can't account for that, right? I'm not a magician. I have no idea what markets are just going to do back to back to back to back. I only know, especially at that moment of execution, what the market can do. From the moment it triggers my position down to the risk management, we can predict what market is going to do. And then we can say, okay, so if this is it, then it should even on the HTF continue to move up here because that's where the probability is lying for us, right? This is where the trade setup is going by 50, 36 over there. Sometimes it mops it up easily without any, what do you call it? Without any struggle. Sometimes it struggles. Sometimes it tries to pull you out. buy side, let's say buy side target. So that's what it's doing. It's already mopped up around 100 pips. 100 pips, still on the way up here. This is the London Open volume. This is the London Open direction. And we've had a beautiful TFX breakout from 26 plus earlier. Oh, nice. You can send some charts in, but I know tall traders charts are MetaTrader charts. So we can't see that analysis properly. Oh, we got Kevja. Kevja got the trade over here. Beautiful. Beautiful. Man, you are taking these trades. You don't even need to watch the stream anymore. You can already see these trades. Now you see that you got that running opportunity over here. But you see the market tried to pull out some traders before that though. So stop loss would have survived. It just came right about the stop loss area over there. Very refined mark. And you see if price over here keeps running up. We can see our buy side targets are going to be met. Buy side targets are going to be met. There's that volume. Now we got London money in. So let's see where we're heading off to over here. It's a pretty big range. So heading towards the top of the much bigger range over there. US 100 is hovering here by 0.35%. Let's call that NAS, NQ. It's so confusing. I don't know what to say. NQ, NAS 100, US 100. You got so many names over there. But anyway, we got NQ on the daily having some clean range to the upside too. I think overall NQPA is consolidating. It's waiting for a breakout here on the weekly time frame to keep moving up. Hey coach, I bought from the 5,000 zone. Would book when it hits the upper. Secure something. Take something off the table. You know, take something for your pain over there. Put like 80%, remove 80%, and then just let the rest run. Because if you're going to reverse over here after such a nice move from 5,000, then, you know, that's not going to feel pretty good. And you don't need that much. You don't actually need that much from the market. It's either you're using very big stop losses or you're being super greedy. But you don't need that much from the market. Actually, it makes it even more difficult for you. The bigger your stop loss, and for me, my perspective is the bigger your stop loss, and if you're an intraday time frame trader and you got a bigger stop loss, you're at more of a disadvantage somehow because you're exposing yourself a lot more to the market. Correct? Like, remember, the market is not your friend, especially in the long run. You got a little bit more exposure. You have to wait for your trades to play out a little bit longer. Whereas tighter stop losses, more refined approaches, they get you to point A to point B a lot quicker. It reduces that time in between that you can get caught. It's like a cop. Remember if you're watching Tokyo Drift, that scene where they're driving on the highway and they're moving really fast, right? And then the guy's like, oh, damn, this cop's going to chase us. Then the Asian guy is like, nah, in Tokyo, if you're driving over a certain speed limit, the cops don't even try because they know like this guy is gone, even if they start building that momentum to catch up. So that's the kind of way that we look at markets as well. We kind of want to be in a similar situation like that. We just want to right through the police officer, you know, then he's not going to attempt to bother us too much over there. But, you know, if you're breaking the law, driving without license plates and you're moving slow, obviously the cop's going to come and get you. He's going to eventually pull you over. So that's what looks like a big stop loss to me when you're an intraday time frame trader. That's what it is. If you're going to use a big stop, just commit to the whole idea of position holding and just start holding for months. You know, and start doing some due diligence on the fundamental work. And I think that's going to be much better. But being in between, you know, you're kind of here and there. So I don't know about that. You got 1 foot here and you got 1 foot there. So you gotta pick a side. You gotta pick a team, my friend. Oh, nice. Trailing and booking partials. Very good, very good. This thing's still on its way up. I think it's creating some structure on the 1 minute right now. Mopped up, I think more than 65%. Yeah, we've blown through 65% of the range here. So start using percent to your favor and not risk reward. Risk reward will be a lot harder for you. If you can focus on percent, I think you're gonna do pretty well. Because at the end of the day, that's kind of what matters. What percent are you up for the week, for the month, for the year? So just think of a strategy that can give you, maybe most of the time you're looking at managing risk, reducing your risk in losing positions. So even if you risk 2% per trade, maybe you're gonna lose like 1%, maybe even 0.5 or less, or break even. Or a high hit rate. You're gonna look at statistics like a high hit rate as well. Ideally can help you, especially when you're using tighter stops. Ideally want to have a higher hit rate just in case you get into market environments where you don't get that market structure form to manage risk. Correct, because managing risk also requires candlesticks to print in a certain way, but candlesticks don't always print in that way because of volume. Sometimes it just pulls in opposite direction. So something that's you gotta find a strategy that's a bit versatile, that can survive like all these kind of market conditions. Correct. So if you're not gonna be TFX concepts, then you have to start looking at what other angles are there. You understand? Like for me, this was the only angle that I could find. But definitely there's more than one way to skin a goat. But if you can find that way, I think that's going to be quite interesting. You can share it over here on the Discord. See, haven't sent a chart in for so long. I feel like a stranger here. Loving the break and retest. Oh yeah, haven't seen a chart in a minute. Missed this very, very well organized confluences here. XAUSD London session buy. Break and retest. Oh, you got the secondary. I saw that one forming, but it wasn't. If we create like some kind of resistance, yeah, maybe. These types of trades I would take when we're moving heavily in that direction. But yeah, I see we got a nice little break and retest right over here. Daily change 1.10%. SMA dynamic support. Very good. Crossover come right here. You see all this is distributing in from this section. Clean HTF range. 5-15-minute close above. It was right here. Fresh 15-minute candle. That's a nice touch. London open volume. Killing it. Very good. This is like how many confluences? 1, 2, 3, 4, 5, 6, 7, 8, 9. But see, this should be like tying a shoelace, kind of like. When you're going through it, it should feel very natural. Not that you have to go and have this on a piece of paper and then see, and then check box. Because the reality is, when you're in the market, when you're in the trenches, there's no time to go through the manual, right? If you look at a soldier in war, yeah, sure, maybe they're gonna have like a manual and a few things on their tech. I don't have time to read the manual when you're in war. You gotta know how to use your equipment. So I think, it's pretty good. Pretty straightforward setup. You're shorting Bitcoin from 71. Stop it, Joey. Oh yeah, it's a feeling, not a checklist. That list is done after the trade is over. Yeah, that laundry list over there is definitely a different condition we're in now. You see, it's setting up again. It's setting up again. It's either gonna pull down quite heavy once it re-breaks those lows, or it's gonna create that support again to re-break the highs by 50.32 over here to move up, to break above, or try and attempt to break above buy side target over here by 50.37. But it's definitely gonna cook something up right now, and then we're gonna see what happens. Either like fully breaks, so we see it's kind of respecting those lows still. Hasn't fully broken those lows. Yeah, our Bitcoin analysis was spot on as well. We can see BTC is on the way down here for the sell-off down towards... Oh, nice. Our targets got met. Look at this. TFX concepts now. Right to the T. Look at that beautiful reaction off the 60 mark. Right to the T. Simplicity. It's what you want to master. Simplicity. Don't overcomplicate things. Even when you're becoming a chef, you got to learn how to make a simple scrambled egg. You know, some people can't even make a scrambled egg omelet, but they're gonna be able to make like sweet and sour chicken, for example. You know, you're gonna know all this complicated stuff, but you ask them to make a scrambled egg one day, and you gotta see like the fuck up the scrambled egg. They can't even make a proper scrambled egg. You know, just start with the simple things. The simple things done right, man, very impressive. Very impressive, man. Imagine somebody makes for you the creme de la creme. Gordon Ramsay style scrambled egg, you know, maybe, you know, simple ingredients, just like a nice fluffy scrambled egg, you know, not something dry, not something like yellow, like something that looks good and simple. Now that's more impressive. You're gonna be like, wow, man, there's an amazing scrambled eggs over here, Vic. Thank you, thank you. You gotta make scrambled eggs in the morning, man. Creme fraiche. I'm sure we've all watched that video at least once. The Gordon Ramsay video on scrambled eggs. That guy taught me how to make eggs. I think he used a bit of creme fraiche in there. So 1 minute time frame. It's still hovering. It's still deciding what to do next. Setting up over here. See, it's still respecting 50.25. We got resistance by 50.31. And we're gonna have a pretty stress-free week up ahead of us, you know. We will just keep focusing on the simple things. Again, if price is moving up here on the daily time frame, then we'll most likely just be looking for buys, and we'll just go where the wind blows. So if the wind is blowing us bullish, we're gonna kind of like go with the wind like this. If it starts to blow us bearish, then we're gonna go with the wind again like that. And that way we stay in line, in sync with the market, and we don't have to overthink the market. Hey, if you lose a trade going in line with the wind, you know, it is what it is. At least you were giving yourself the best shot possible. Try and break the lows of that accumulation. Now it should actually see a bit more of the downside, unless that's going to be just a liquidity grab. But wheels of probability are spinning right now. Let's see what the market wants to do. Whatever the market does at this point, it was really none of my business. I've already come and done what I needed to do. If you stay in the market long enough, you will give back your profits. So we're just gonna like paper trade and watch what it does over here. See if it actually like fakes out traders. Maybe gives a whip. Small little whip situation underneath this, and then starts to pull back if it wants to break above 50.36. So remember, don't give the market a chance to get your money back. Make your money, and you gotta make your money and run away. That's how you stay profitable in the market. The problem, there's a lot of noise. In reality, there's a lot of noise for a lot of people, so they feel that they need to always be involved, always be trading. But I guarantee if you take like a calmer approach, a simple approach, 1 or 2 trades maximum a day, you know, provided you have a good enough strategy, because obviously even 1 or 2 trades a day is not going to help you if you don't have a good strategy, then I think you're going to be just fine. And you don't need to suffer phases of emotional baggage. You know, emotional baggage is when you're having like back-to-back losses, when you're kind of fighting with the market. It's emotional baggage. You know, you gotta reduce that emotional baggage. So you gotta keep the bag weight light. So you take like 1 or 2 trades. Just manage your losing days. Don't accumulate and don't compound losing days. Try very much limit those. And it's where you go wrong is when you try and fight the market. You see, like, you should be getting humbled pretty quick. After 2 losses even, you should be getting humbled pretty quick. You shouldn't be fighting the market, even after 1 loss, in my opinion. Maybe reduce risk on the next trade that you take. So if you got, like, let's say a 2% risk a day, you take your let's say you lose 1.5%, then you only got 0.5%. Ideally to risk for the next position. So you're well within your daily range over there. So this would just be a good beginner way to start looking at risk management, right? I personally break this rule because I know the hit rate of my cluster of good and bad trades, so I can kind of wiggle my way through that a bit. But for any trader, you got to stay as much as possible within your daily limit. So if you got like 2% and you're risking like 1% a trade, then also you got to risk, you know, 1%. If that's minus 1% on the next trade, just keep it within the daily limit as a start. My daily limit as a start used to be not daily limit. My daily limit was on average maybe like around 1%. But in reality, with trading, we can say 1 to 1.5%. I used to risk 0.5% per trade, allowing me to focus more on the skill. Still get involved in the market, but you see, my whole idea behind trading was I need to learn the skill. As the skill is what's going to pay me. My account size is not what's going to pay me right now. So I was risking 0.5% just so you have that psychology of trading real money, at least. Oh, my keyboard's disconnecting. Yeah, then you just focus on the PA. Look, you got a small little liquidity grab there with the SMAs holding price. Got a small little kiss of death too. Bitcoin dropping like flies. Yeah, people are gonna take loads of shorts on BTC. It is on the way to the downside. But people, let's see, but people do the opposite and increase risk to get back the loss. And if it's loss, it's just digging a bigger and bigger hole. That's true. It's like a quicksand, you know? So like when you're stuck in the mud and you're like, you get all frustrated, you keep moving and you just keep sinking. You keep fighting the quicksand, so you keep sinking. That's the same thing as revenge trading and risking more. Whereas what you're meant to do in quicksand is you're meant to remain calm. And hopefully someone gets you out. You know, someone gets you out. Stop the bleeding over there. So that's when you're going to need education. The only thing that pulls you out of that is education. Haven't you ever heard like education gets people out of poverty? So, you know, it's the same way in trading. Man, you're in a poverty in trading when you're still in a drawdown. You know, so you gotta find a way out the hood. But the only way out the hood, most of the time, you gotta get educated somewhat. You know, you're gonna have like some kind of education, whatever that's gonna be, formal education or not, but you definitely need some kind of a skill. You need to provide a value to the world that the world can see, and then, you know, then you're gonna get out there. Because you can't be a profitable trader without any value. Right? You know, that's the whole idea behind these live streams, is to share that value of how to become a profitable trader. So you still need to provide value to the world in some sense to be a profitable trader, to the market at least. You know, you pay your tuition fees to the market in the beginning, and then that's it. Then you get the graduation hat, and then the market now will keep testing you. Just like life does. When you finish a university degree, life will continue to test you beyond the university degree walls. So you get the same degree in the market, same as, and then you get into the real world, And the market will always test you to see if you're still following the rule book of what you should be doing in the field that you are doing it in. Correct? So every day you're going to still get those same tests. So stick with it. You got the system, you got the education, stick with it. And only thing that changed now, you get adaptability. You know, whatever field that you're in, as well as in trading, you adapt to different market conditions, right? You adapt, you get better with the market. You don't remain in the same place. You start using tools to your advantage. What are we doing right now? What can we do? So you see, like for 2025 over 2026 over here, we've realized loads of volume. So we're coming in with a mentality of this is going to be a year for us to maximize profits. So we're going to take advantage of this year like this. And, you know, it's the same way as any other company does. Any companies, when they're in a boardroom, they have these same conversations. Hey, listen, this is a trend. This is what people are thinking. This is what people are into right now. We want to put our product like this. You know, that's what Pepsi does. That's what Coca-Cola does. And it's the same way. You're running a business at the end of the day. So like 2026, we had our boardroom meeting. We said, and I've been trying to tell you guys like since 2025, end of 2025, December time, especially during the December time, was emphasizing this. Volume is coming in. So position yourself correctly. You know, position yourself correctly. You see, now it's all about positioning, strategizing and positioning. So it's the same thing. Like when I was in school, I used to study public relations, and that's what we used to do. We used to go to, sometimes we would have these tasks where we would go to a company and we would pitch our idea to the company. You know, so they would have like, oh, so you guys have an annual stakeholder meeting coming up soon. You're going to be doing this event over here. So this is the strategy we can use to build your social media platforms. This is what we can do, you know, get some QR codes, etc., etc. We strategized first. And then when the annual stakeholder meeting came about, we positioned ourselves ready to leverage off of that volume. All right. Like it's always going to be in relation. Like life and trading is just one and one. So that's why most of the time you realize like reason why people are not profitable with trading is because they're not even profitable in other areas in their life. Because it's a mental model of, it's a way of thinking at the end of the day. If you're chasing shortcuts, you're never going to make it. You know, there's no one who's successful who chases shortcuts and makes it. It's a mental way of thinking. That's why there's very few successful, consistent traders. You know, so don't chase what you're seeing on social media. Focus on the price action. Focus on what needs to be focused on. And then, you know, take your time with that. And if it's a simple enough strategy, amazing. You know, that means you can execute on it without much of a hustle. And there's less variables to worry about as well. Like a nice, naturally aspirated engine. You know, a nice Toyota Corolla will get you many more years than a Lamborghini will. You know, there's a lot less moving parts as well that can go wrong. Much more of a reliable vehicle. Yeah, it's like Warren Buffett's old Chrysler. The guy's a freaking billionaire driving, you know, that old Chrysler. You know, it's very nice. It's a very good image to his character and what you kind of need to be as a person. I mean, if you look at Elon Musk, man, you know, he hardly ever really shows off. You know, it doesn't really show off much. Dresses very simply. Doesn't show off a lot. Most of the billionaires and tech billionaires you'll see at NBA games, they're just gonna be simple people. You know, it's very simple people. It's a skill like Steve Jobs also saw from the very beginning of Apple. It's like, how can we make this like, to take it to a new level, to elevate it, but also to keep it simple. Simple enough so people are able to use it. Because back in the days, using a computer was almost impossible, right? Very complicated to use a computer. But Steve Jobs is like, hey, we're going to simplify this and more people are going to use it. At the same time, we can elevate it too. Yeah, this is accumulating right over here. It's getting ready for... I feel like it just trapped the sellers in here. It's trapped the sellers and now it's like prepping for... it looks like it does want to continue to push up bullish. And it said, how big was that break anyway? Let's see, it broke here. It pushed just about... Okay, so that if I took a sell there, that would be just about TP. I would say this would be a break of around, let's say, close to 20 pips. close to 20 pips. It's quite wicking a lot. It's wicking a lot. Small accumulation, small liquidity grab here. It's holding. It's deciding what we're gonna do next because we still got a few breadcrumbs to move up there. Like 48 pips. 48 pips. Now it's like still rangy. Got loads of wicks over here. 8 SMA is kind of catching up. It's still holding the PA quite nicely too. It's like a rocket. You got the flames right over here. It's trying to like push itself up. See if it can get up towards like that 50-38. See the volume is coming in. The engines are in. Blast off. If we can get through that level though, that buy side target. Just distribute it from that small break. Right here. Tiny break. And I start to attempt to break above the highs. It's overall stuck within a range. If you look at gold spot on the HTF, you have this zone up here. And you got this zone down here. See, that should be the market open. You got market open gap. Boom, boom. Create a support. I mean, technically that should be it. It's not the prettiest of accumulations because of that market open gap. Maybe we would have to compensate that with a phantom level here at 5k. And then just disregard this as some kind of a market open volume. But this would be the true range of where price is currently holding. So you got that support level right there. You got resistance right here. And then that will become like the fakie below this section. But we're well stuck within a range. So we got a support right over here. And we have resistance. So bouncing off the support, heading towards the resistance targets. $5K daily targets. We possibly gonna be looking at. See if that's market open. Maybe like 5,200. We can say maybe daily target by 5,200. Could be well within reach. So if we keep going up today, there's a big accumulation that we're currently in right now. I feel like once we start breaking beyond that point, should be able to see like 5,200. Let's see if FXCM is back on. Yeah, looks like FXCM is back on here. Nice. Or is it? No, it's not. The 1 minute's not working. No time frame is working. There's a countdown on the daily. But the chart is still closed. See, gold back above 5,000. Ahead of key US data this week. Gold prices rise back above the $5,000 mark on a softer dollar as traders await the release of US key data this week. We should be getting NFP week. And early trading futures in New York are up 1.4%. See, investors reasserted their long-term bullish views on the precious metal. Large institutional investors remain bullish on the bullion except the recent sell-off. Now, overall, we are still bullish. That recent sell-off was feeling more of a bit of a correction for sure, especially the much larger one. I think they might be talking about that much larger one. A view echoed by the People Bank of China, which extended its gold buying streak to 15 months in January. Traders now await US non-farm payrolls data and consumer price index figures for more cues on the path of interest rate cuts. Right, and we remember we still got the, oh nice, prices come up towards buy side target over here now. So we got our range here. As you can see, the range has now been filled. Range has now been filled towards 50.36 over here. Nice. Very good. Now we gotta see like where is the next range, correct? Where is the next range that if price goes through that range, you're gonna get like maybe a better probability of direction. As of right now, actually, you know, we got a pretty nice trade over here because out of all of this price action here, this one was like one of the most cleanest ones, you know, and beautifully lining up as well during the London Open there. So you can see that timing aspect, how important it is. We just came in right at the right time over here, not to waste time dilly-dallying in these other PA places, because there's no nice ranges here. Like very compressed, maybe one here from here to here. Pretty decent move, a bit of like a wick fill situation. Also from here, oh, but that pushed quite deeply to here, but nothing too as appetizing as what we just got there with the London Open. Obviously, that's not going to always be the case, but it seems to be the case here today. Because I believe it's, you know, just the first day of the week here. So market's probably just going to set up throughout Asia and then start really get the ball rolling throughout the London Open into New York. But you see now it's filled up the range, so a much deeper retracement. The retracement is definitely going to start coming in anywhere between like that 65% to resistance mark. The much deeper retracement. So since it's already filled that range, you'll probably see like deeper retracements start to come in of the sort. So it's really nice if you ever gonna get like price action first pull down enough for you. I think it's pretty good. It's just the same way that when we went live against this guy over here, well, not really against, but it was basically the same kind of like concept of the trade. Like price was to first come down, and it's the same trade that he took as well. You notice like price first comes down, then it sets it up for you, and it creates a much better chance if you're gonna get like a kind of slingshot to the upside over there. It's just quite important where he came in as well, because he came in during the New York session. So that also increased the volume, the chance of his trade to do the same thing. We came in when we did this live as well during London Open, correct? So also right now the same thing, just did the London Open. And throughout the day, you do have these time slots, I suppose, which could be look more of like a premium time to trade. If you could get involved in those times, I think that would be the best situation. If you can't, then you can definitely make do of what you can trade. But there's definitely like premium times. We're gonna see like the pre-London, pre-NY. And it's not like just throughout the whole day. It's just like maybe 2 hours pre-London, 2 hours London. You got pre-NY, that's 2 hours before NY opened. NY opens in another 2 hours into that NYSE. And then from that point is going to be the London close, and it's pretty much just dead. There are a couple hourly candles, we can say. Those are the hourly candles that you want to really look at your hourly time frames during the times that you can get involved in the market and see like how good those hourly candlesticks push. And that's why I would say like understanding price action is so important, right? Before even understanding a strategy to apply to the chart, Just understanding how to read the candlesticks in the beginning is going to be the most important thing. The funny part was in the same price zone. Nice inverted spike. That's that move. What was that move? Is it this move? Yeah, it's that move right here. Break above the high. And then to spike up from this section here. Break above the high. Fill up whatever's remaining of that range. Liquidity grab confluence below these lows. Sellers stuck in inverted head and shoulders. See, you got right here. And also some confirmations. Additional confluences. Keeping the chart work clean. Not bombarding your charts with too much information. As candlesticks do need to move, you can see that volume came in. Most of the time, there's going to be like a 10%. And then most of the time, it's going to be 90% here. Just got to be waiting for that next 10% probability of where price goes to next. I wish you the best luck on this journey. Thank you, Muhammad. I wish you the best luck on your journey as well, sir. But I make my own luck. Steve Harvey. Is Steve Harvey said that? I don't get lucky. I make my own luck. Luck? Guys like you always think guys like me get lucky. I don't get lucky. I make my own luck. Yeah, but this is it. Range has been filled. Now market's got to set up again. That's all that it is. That's all that it is. Very, very simple stuff over here. All right, it's got a small liquidity grab situation above that high, which is just profit taking after filling the range. Really. So we're just kind of tracking the market from where it came from. So you see, whenever you come onto the chart, as much as it's important to look at what is currently happening, also just better understanding the context of where price has previously come from. So also as we're coming into this trade over here today, we're seeing that price has come from pre-session, a pre-session sell-off. We know that daily was bullish, but since we've already dipped so nicely during a pre-session sell-off over here, that's a pre-London, we even know that's going to make this trade even more juicy if it plays out for us. Because, you know, like sessions sometimes do the opposite, right? Sometimes you're going to see Asia go down, London go up, and then New York session go down. And then later New York session typically goes up again if the daily trend is bullish. So that little session bias, I think, you know, it adds a confluence in there as well. So we could add that too. Like a session bias here for a counter trend move against the Asia session, because we are currently up like 0.80, well, actually 1.26%. But for some reason, that does not really look too major. It doesn't really look too major here. We go on FXCM. Oanda has a lot of gaps. Because you see on FXCM, we're up, or we would also be up roughly the same amount. But for some reason, that daily does not look as exuberant. But anyway, daily percentages don't lie. So if daily percentages are pretty high, then that's good. BTC's got some 4-hour resistance here. Let's see. 1 hour is distributing on Bitcoin. I think Bitcoin wants to actually push towards the downside there. Starting to already break below the lows by 70k. Looks like BTC wants to have some further downside. Oh, amazing. That 60k mark, just like a magnet that was. Exactly at 60k. See, there's like institutional numbers. Sometimes the market's going to look at these numbers very, very closely. Just the same way we just had gold here at 5,000. Notice how like 5k got respected so beautifully there compared to also 60k on BTC. All is nice to have that as some kind of a confluence, and we also spotted that as well while it's executing on this move to the upside. So it's just across the board. You can see on all types of markets. That's why price action, understanding price action is quite important, because you see that resonates with all kind of markets. It resonates with NQ if you trade NQ, gold spot. If you're a good trader, you're a good trader. Like, let's just say that, because most retail traders base their trades off technicals anyway. If you're a good trader, you're a good trader. You can trade any market condition. I don't think necessarily it's gonna discriminate. Maybe your hit rate will definitely shift due to volume reasons and how well you understand the current market as well. Just like, you know, if you're really good at selling phones and you go to a market where people are selling computers, you know, you could probably still like transfer that knowledge and get a good amount of sales in, but the guy who knows more about the computers will outperform you, right? Because that's a specialty. So that's kind of like how you could look at different instruments in the watch list. But as long as you have that strategy that's still profitable, it can be applied. So we got some red banner here. Oh, got data issues. No real-time data engineers are investigating the problem. I think this is a FXCM issue here, or? Yeah, it's a brokerage issue. Goldie is cooking. Привет, как дела? Christoph Denbin 7420. Как твой день идет? Да. Мое день очень прекрасно. Сегодня сделали хороший трейд. Сделали чуть-чуть деньги тут. Теперь будем сидеть и ждать. Ждать, что видеть, что голд тут теперь будет делать. Если будем вверх пойти или вниз? Что будем делать? Что будем делать теперь? Вверх или вниз? Вниз. Я думаю, вверх для день сегодня. Ну да, есть такое большое место тут, где у нас есть resistance, support вниз. Надо смотреть, как будет здесь, когда прайс придет тут рядом. Если будет пойти вот так. И это значит, можем видеть, может быть, 5200 сегодня. Я думаю. Это будет очень прекрасно, если это случаться будет. So let's see. Let us see. Can we break out of this range? We gotta break 50.49. 50.49, get through that mark. Off to the races. So this is just a warm-up, right? This is a warm-up PA over here. It's quite interesting to see how long that London position would survive as well, because technically we still have a load of buyers within this section right here. That price can continue to move up bullish. So quite interesting if we're going to correct that, tap into that zone again before we move up bullish. Because that's typically what we've seen in these high volume areas of them getting retested multiple times, right? But we got one retested. I think that was the initial shake off. Well, oh, nice. It's starting to break out. Look at this. Volume starting to come in. It's starting to break this section right here. The accumulation. Look at that volume. Where you running, Goldie?
Why are you running? Why are you running?
Fly, I believe in you. But yeah, anyway, price is setting up over here. See just the way it's set up, like beautiful one right here. It's setting up one right here, and it's getting ready to push the upside. Nice little SMA crossover there. Here we got the crossover. No crossover there. But yeah, I believe the first shake off probably was this wick coming down aggressively like this to take out the lows. You can see that just in about a minute, a time span of a minute, like strong pullback, and then still managed to push back up again. You know, this candle here is about 30 plus pips, about 47 pips. So that's on a 1 minute. It came down, flirted with that section right there. This is close to where our initial stop loss was, but I don't believe it actually hit the, or would have hit the stop right there. Yeah, I mean, like, that's pretty much nothing. You would have to break through it properly for us to consider anything, because we know there's market loves to flirt with these areas like that most of the time. So it looks like after hitting TP, it came back to kind of like remove some of those traders, because TFX concept is very like refined. There's a certain way that you're gonna trade that you can kind of like corner the market, right? There's a certain way you corner the market, and there's not much you can do outside of that box. You know, especially when you're trying to be consistent, you can't be all over the place. There's only a certain amount of variables you can like squeeze into a certain area. You consistently approach the market like that. So we kind of like squeeze it into a certain box now we call TFX concepts. So this is something that we typically see from time to time. Obviously, it's just the market trying to quickly just get out, you know, just a few of those traders. It doesn't need to do it much. You know, the market's very refined as well. It doesn't need to do it much, because remember, windows of opportunities are so small in the market. You just like, you want to get really good at what you do, right? And you want to understand what it is that you're trading and how it is that you're trading. You got to get really good to the pip so you can fully understand your system. Correct? So I think it was quite important over here. I think that's what it did. Prior to it actually moving up, that could have been the thing that shook out a majority of the traders. It might not need to come back down there anymore if that's the case. Your SL is at 16-18 pips too on that one. That was about 20 pips. They're gonna use like 16 or 20 pip SL. Difference of 4 pips, but you know, it can make a difference. Those 4 pips. It's like buy side target here. It's currently in a, or attempting to do a breakout right now. It is slowly attempting. You know, the thing about gold is it has a lot of heavy lifting here on the left hand side. You got multiple resistance. You got one resistance here, got another resistance right here. And for it to actually come up and break these highs, it's gonna require quite a lot of volume in the market over there, because I don't know if we can do it throughout the London. If London has enough steam in it. Remember, it's like the beginning of the week as well. We're not necessarily seeing price move with so much exuberance too. It's the beginning of the week. Looks like it's still just getting ready here. So we'll see if we can actually get through that level. There's a lot of, this is what we call like a supply zone. So you got a lot of supply within this area, and you're just trying to figure out how can I catch like 16, 20 pips. 20, maybe 30 pips within this range from here to here. So right now you see the structure. It's not really looking too appetizing in terms of HDF clean traffic, because there's a lot more speed bumps for us to get through the buy side targets over there. Whereas like if price was to actually sell off, you'd have a much nicer and easier time for price to move down from here to here, back down towards the level at 5K, which could also be what do you call it, like a magnet for price. If you actually start getting sell confirmations by 50.24, 5K is gonna be like a magnet, just the same way that resistance up here we spoke about was a magnet by buy side target. It's the same way that if you start breaking below that support, you're gonna see 5K become like a magnet here. It were like 200 pips to the downside potentially, because we're still within a range, right? We're just blowing where the wind blows as well. So you can see price is still within a range. Actually, it shouldn't be even breaking these lows if it does not want to continue to move down. The only time it's going to break that low and it doesn't want to move down is obviously if it just needs a bit of orders, right? If it's really struggling to move up right now, due to a lack of volume, then it may attempt to come down to like see if it can get any liquidity. But the good thing about these pushes, they're quite decent and forgiving. So even if you do take that counter trend, you can still get away unscathed. Just the same way like this little sell-off over here netted about 20 points. Let's first see how the break was. Yeah, you see that? Right to the T as well. Just wait for like a solid break of that region. There's the reasons why we do what we do. Then you got your break here, which was just roughly above, in this case scenario, I think I would reshape that and then see, yeah, just about like 18 points. That's 16 point stop loss. You gotta get away with TP, 20 point stop loss. You're looking at a break even potentially on that. But yeah, now it's coming back down to 50-24 area here. We'll see what it does, because yeah, we definitely do see the path of least resistance at this moment is down below support. The buy side is just gonna be a very, very big challenge over here. You can also see, I mean, even if you're gonna use like the EYES indicator, you can see even like based off your own experience, it's not gonna be easy for price to get through that level, correct? Like even trading all manner of different strategies, approaches to market, there's a universal language that the market speaks that we can all understand. So we shall wait for some kind of a confirmation, or rather we'll just wait and see what the market does here by support. Never feel pressured, chat. Never feel pressured to trade. I know sometimes the analysis here can maybe make you feel like you want to take a trade, but don't feel pressure to trade. If you had like a successful trade already, trust me, just call it a day. Just call it a day, because now you're part of a group of people who can call it a Monday over here with a successful trade, which is not a lot of people can say that. It may seem like it, but not a lot of people are gonna say that. Or maybe, yeah, not a lot of people can say that, because they're always, even if they start a successful day, they're gonna end it unsuccessful by over trading. So exactly, you should never FOMO. Never FOMO in the market. In fact, I think what you should do is compound your winning days, if anything. If you are gonna find yourself in a situation where you're FOMOing, rather do that on a winning day than a losing day. Because you know what's gonna happen is those are gonna compound winning days. Because typically on a winning day, that might mean the market conditions are good, the strategy is operating, so there's a chance that it increases. The next trade might also be a winning trade, correct? But if it's a losing day, oh man, you're gonna find compounding losing days, because sometimes what happens is, even if you're looking for price to go up and you still get these sell confirmations because maybe the daily bias is bearish, but you can clearly see prices moving up, you still kind of lose those trades as the daily is pushing up. So you get these amazing confirmations for sell-off, but due to session bias that is still trickling to the upside, you're gonna take like back-to-back losing days. That literally happened to me. I think it was one of these days. Yeah, it was right here. I think it was even this example. It was like 307. I took a sell, and then at 325, you see, I kind of revenge trade that sell, and then I took the sell, and I got stuck in the same bullshit loss that was a first loss. It was literally the same thing that happened to me. But you see, if I was looking for a buy for XY reasons, then that would have been both wins. Just similar mentality as how, you know, these other days can go. You start off the day profitable, it's a pretty good sign that the next trade can be profitable too. And now coming down to flirt with 50-24 area there. Yeah, candle that's just about to close. Gotta take out these lows. 1 minute 50 seconds. Gonna see how this candle here actually closes. See, path of least resistance. It kind of like bumped its head on these resistance points here. You could see there's a lot of supply within that region. So it's got to look and see where's the next best area that we can go. Isn't that interesting though? How the market does that. Like you look at this with our reversal tool over here. See, it comes up and says, yeah, we got a bit more buy side target. All right, let's see if we can break above. All right, I see we can break above. So it comes down. So it's like very, very intentional as well in the way that it moves. All right, it's not random. And see, this is going to be quite the struggle. And it's not because of a magical orb or what have you. It's just because of what we see without any strategies, looking at the naked charts. I would say like understanding naked charts is actually the best thing that you're going to do for yourself as a trader. You know, if you're feeling yourself as you're getting into a lot of complications at the moment, a lot of like over analysis, start stripping away everything and then start just looking at the naked charts and what candlesticks do. Not necessarily on all time frames, just focus on even like one time frame, preferably like the 5-minute, because the 5-minute gives you a very good balance of data. Because sometimes the 15, you know, you're not gonna get that much data, but on the 5-minute I feel like it gives you enough balance of data over here, especially if you're a day trader, correct? Like if you're just taking trades from this ends to these ends, that's essentially a 5-minute time frame is going to be very important for you to understand. Because remember, like most of us are day traders anyway, right? I don't see what you're doing much on the higher time frames, because you still need that information you're only going to get on the 5-minute and a refined execution on the 1-minute. But to take a trade on the 15-30-minute, I feel like it can be definitely a bit more difficult. But if it lines up with the setups on the LTF, then, you know, even better. I would say even better. But you're gonna miss a lot of moves if you're always on the HTF. Maybe if like the LTF is too cluttery for you, then the higher time frames can mop it up a bit more if you need to. So you can see on the 15-minute here, we just took out the highs. We just took out the highs right here. Small little liquidity grab position potential. Now it's started to like break below that support. We should just be getting that new 5-minute candle open. 5-minute volume to be coming in. Daily time frame as well, stuck within a range. You can get some double tops over here on the hourly. Sorry, my bad. They got hourly time frame, resistance, double tops. New hourly candlestick opened up not too long ago, so it's still setting up. You can see it hasn't had its move yet. It's still preparing for a move. It might be that range. You see, it's flirting with the idea to fill that range. So if it wants to keep moving up, it might look at that as a source of liquidity. Basically, if it comes and it takes out these lows. It came pretty close, but it didn't yet. There's only two options here. I would say, like, take out the liquidity to reattempt the highs again that we failed on those hourly double tops, or we just succumb to that level and then sell off, fill up this range, and just play the range up until pre-New York. Fundamentally wise, we only have core retail sales, which should be coming out as a negative for the dollar from a decrease of 0.5 to 0.4. So if you're going to be trading, then I think this is going to be like a bearish forecast for the dollar. Should be bullish for gold. Core retail. No, actually, my bad. It's Monday. We don't have anything on Monday. This is Tuesday. Monday is free. Yeah, we got core retail sales tomorrow. Oh, nice. So we don't have any news today as well, which is actually really nice. Maybe Trump is speaking. Let's go on his calendar here. President participates in town pool house White House press conference. Pool lid called for February 8th. President arrives, president departs. Yeah, it doesn't look like there's anything here. Next FOMC in 37 days. Let's see, probability shifted. March is still looking at no change. April is no change. It looks like pretty much all the same. June easing at 70%. So as of right now, it does look like summer months are very much expecting those rate cuts. Still at this current moment, 70 and 80%. So the US dollar can hold it off for a bit. March, April, it's gonna be fine. June, July, we're gonna see further downside on the dollar potentially. Got about 50 seconds for candle here to close on the 5 minutes. About to close below that support. 200 pip range down towards like 5k. That's currently setting up nice little SMAs right over there as well. So it's just a probability thing, right? So if price is coming down towards the support and it's about to close, what's the probability that this candlestick continues to move down? Right? Because you're just trading kind of what you see that the market is doing, not what you feel that the market should do. So if it does close, what's the probability next candle opens and then re-breaks the lows to continue moving down? Because you don't know. You don't know if it's going to come up, if it's going to fake you out. You don't know what the market is thinking here. You could already be thinking that's a fake out, but you don't know this. Right? But it's only about the probability of what candlesticks do and close that can show you where it would like to go. But you don't know like 100%. You see, it's even flipping. See, people thought it was going to close. Literally like 50 seconds left on the clock. People thought it was going to close. That candle was literally bearish. You see, you don't know. This candle was literally bearish. It was about to close the support. It's reflipped here in a few seconds. It's like options trading, I think. It's about gambling on how candles are going to go in the direction, I guess. You see, even in that is difficult. Even a candlestick could be down here 10 seconds and then still flip in the last like 5 seconds. And then close above that zone. Or bullish. See, it senses the level. That's a beautiful thing I like about price action, support resistance. It senses the levels. You can see the market sense the levels, right? And with a very simple analysis, without overcomplicating and looking for some kind of a hidden fair value gap over here for some kind of institution, you kind of are just trading what you see, which at the end of the day, you can never really go wrong with support resistance levels, you know, because this is what we all use. Like even if you look at the price of oil price is always going to be at like a certain demand or a certain supply. So it is how the markets are governed, right? These are governed by such levels such as those. You know, you're going to hear a lot more people talk about supply and demand on the news than you would ever hear anybody mention a fair value gap. I like to throw a bit of shade on FVGs because everybody uses them, but very few people are profitable with them. Very, very few. It seems like a lot of people are, but it's not the case. I can guarantee you that. Very much guarantee you that because there's no foundation towards it. You know, it feels a bit too far-fetched for a retail trader to conceptualize and just make up in their bedroom. You know what I mean? It's like, but what we see is what we get with the market. See, like market accumulate, you know, that's what we see, that's what we get. So what can we do and leverage off of that? Either like a support over here, that's what we see, that's what we get. So that's a like 50-24. So even if we want price to come down, we got to break through that 50-24 mark. That's a support region right there. Yeah, and if we can break through that mark, we don't even need it to fill the full range. If we're looking for sells, we just needed to push like 20 pips. At least a 20 pip. But if once you fill the range, you can fill the range, then that's going to become like a mirror right over here. And they're going to like kind of mirror its buddies. Because the market loves mirroring itself, correct? So you always say markets move in 3 directions. You're going to be moving bullish, sideways, or bearish. So what part of the cycle are you currently sitting at? You see, you got to recognize this and then base your trade off of what part of the market cycle it is in and what kind of an opportunity that can give you, right? It's the same thing that when we took our first trade here, which was an amazing trade, made some really good profit on that position, that it did the same thing. And then it came up here to kind of like, you know, mirror this move right over here. So again, it's like, what part of the cycle are you in? how is that gonna reflect on the outcome of, you know, the kind of profit that you can expect to catch, right? So you can see with this trade, very nice bomber clock trade that we had about 50-15 over there, and the range opportunity was massive, right? We're looking at around 200 plus points as well on that to fill the range, which it did. Correct. It's just the same way as we broke down on Bitcoin, as BTC started to tumble below that weekly support level by 80k, and then to come down. A range opportunity here was roughly towards that support at 60, which you can see as well. It doesn't line up with anything, my 60 target. Like there's no real kind of like a refined support area here. It's just like a 60, right? Because this is a psychological support. It's the supports that you don't see, basically. So you got some supports you're gonna see, like easily support resistance level, you easily see spot out, like you see right here. And you got others that they're psychological, like these, or the moving averages, for example. That's why these are quite important, because I also show you areas in the market where rejections might be coming through, so you don't get caught holding the bag in case you're still waiting for the follow through. Just same way as we got on the 65% mark right over here. So if price comes down, starts to break below these zones, once we start tapping into 65 here by 50-10, we will be expecting some kind of like potential reaction as well, as it comes down. It's confusing seeing all candles having an FVG. Hey, what's up, Shalu? These are the days you should cut the stream short. We're consolidating at the top, and do you really want to sell gold? No, I'm not going to take the sell. I'm just breaking it down. I would have the shortest live streams. Imagine if I close the stream every time after a trade. This would be, some traders gonna wait like 4 hours, 3 hours, 2 hours. Most of the time, I would say definitely like 80% of the time, we're getting our trades quite early, 30 minutes. Probably have like on average 30-minute streams. I'll be like, I'm in and I'm out. I'm in and I'm out. All right, guys, I'm in. All right, guys, I'm out. Life of a scalper. Hey, guys, welcome. Good morning. Good morning. All right, guys, I'm in. All right, guys, I'm out. All right, guys, see ya. See you tomorrow. I'm in and out. I'm in and out. Oh, look at this coming down over here. In and out burgers. I'm in. I'm in. All right, guys, I'm out. I'm out. Life of a scalper, man. You get like hate it or love it, but if you gotta know the skill yourself, then you're gonna love it. And say if you don't know, then forget about it. But if you know, you know. Life of a scalper is a... We really like the idea of being a scalper because of that reason. We get in, we get out, we get tighter stops, we get bigger rewards. To be a swing trader, you're gonna need a lot more capital, I feel, to make more worth your while. Maybe take like less trades a day. So also you gotta consider that part of it. It's always paradoxical because people say scalpers don't make money because in essence, like, we just scalp the market, we're in and out, right? But at the same time, people say swing traders, to be a swing trader, then you have to have a large enough account size. So there's always an excuse the brokey mindset will always conjure up. You know, you can never satisfy a brokey mindset. There's always gonna be something. So I think it's very important to remove the boundaries and the walls that are in your lives. Don't always find an excuse for every solution that there is. Don't always think that it's not possible. You know, that's why we call it being arrogant. Just look at, see what is the solution here? What are they doing? What is it that's working for this individual? Because all too often, you know, it happens in our personal lives where we always want to be correct. Right? It's very hard for us to change. You know, they say you can't treat an old dog new tricks. Especially past the age of 30, it's very hard to teach people a new mindset. That's why, you know, you can never look at your parents, for example, and then you think you're going to start to change their life or the way they do things at a certain age. You're not. Because, you know, past the 30, that's kind of like the person that now you're becoming fully. So that's what you gotta always be mindful of, is being that adaptable, being adaptable. That's why I look at like these entrepreneurs who are much older, and them being so flexible at even those certain ages is quite impressive. You know, that they can always remain adaptable. And if there's a new idea, if you look at Shark Tank, most of those people are well over their 40s, but you always got these new ideas coming in, and they can always see the angles. Like even Mr. Wonderful. How old is Mr. Wonderful? And he invests in some pretty out there ideas. Mr. Wonderful is about 71 years old. But you see, his mental model towards investing allows him to be adaptable to certain changes, like certain new techniques and whatnot, and what's available in the market to make money. But he bases that off the data as well to see how well it's performing. So it's a very data-oriented guy. Not a lot of wishful thinking with this guy, but yeah, pretty good. And you see, he has a skill. He has a strategy that allows him to remove the emotions from his decision making. It's just the same thing with any strategy in the markets. Yeah, strategy that will remove your wishful thinking towards the market, so you approach it more with data. You understand? But anyway, price here is a closing below support. It has closed below support, but that's quite a nasty close because it pulled up so aggressively. But I think the breakout was quite decent. It's like, well, like almost close to 50 pips on the breakout, but I think it was this section right here, this accumulation from here to here. Definitely a bit of sideways movement in there. It's attempting to break below that support. But it did leave quite a nasty wick behind, as you can see on that pull up. So not the most ideal situation, you know. Ideally we should have seen. I think what was happening was that maybe a variable of other strategies in play as well, because you also got these other plays here from here to here, potential Fibonacci retracements coming in. This would be the golden zone area right here, from here to here. Possible retracement in the golden zone, attempting to move up bullish. But you see, ideally this candle could have closed, if it wanted to really come down, it was looking for as a bigger liquidity grab below that zone. If you really want to come down, to get a solid close like this, the next candlestick to keep pushing to fill that range. Kind of like mirror this section right here, but you see it pulled up. So for me, that kind of looks more like, fine, it was a decent move, as I said, you know, if you can even push like 16, 18 points, whatever. Did like 15 pips on the breakout, which is quite nice, at least quite forgiving. As I mentioned, the market can be at these moments. It may be looking still to get those orders. It's trying to fetch. It's playing fetch right now. You can see on this candle as well, price came down once. It didn't break the lows, but it pulled back up. It retested this area. This one dipped in further, but you see the buyers are really kicking in. Candlestick did close below that support. But you're seeing a lot of buy pressure, because ideally this is not what you would even want to see, right? That's kind of like quite volatile. Even if you look at the trade that we took, for example, this candle here had moved up already like almost 100 pips, you know, before triggering us in. But it still was able to continue pushing. Even on the next candle that retraced, it didn't even do more than 20 pips retracement, right? This one pushed like almost 50 pips, and then the retracement all the way back up here from the break of the lows was about like 63 pips. It's a little bit more aggressive, a little bit more volatile in this area. But yeah, ideally it should be coming down if it's starting to break below support. Just gotta wait and see. You are trading a range. Don't forget about that. You are just trading this is a range high, and then if prices hit the range high, this is a range low. Correct? So where are we going to next? Because we've already seen and tried these levels here. So this is kind of like the PA that you have to deal with. Obviously, it's not the cleanest of PA. I think you can see that as well. It's not the cleanest of PA. It kind of needs to shape up a bit more. But as a daily here is still bullish, 1.11%. I think if price came down and then created that situation again, that would be actually quite a clean move, because throughout the whole day so far, I feel like this has been the cleanest PA that we got, correct? Because we got that very nice dip right here, very nice dip into nice little trade that we took over here. The price moved up, but these other areas are not like that, or rather they're even going to be a lot smaller, or maybe it was less obvious with a lot more other things to consider. Like you see the sell here had a wick fill. They need to do a wick fill first before the support, whereas this is just clean candle bodies, so that shapes up to be quite nicer as opposed to something like this right over here. And then everything here is a bit garbage. This is a bit more whiplash. Fine, you can scrape up a few points over here, little shotgun play that happened right below here to fill that range, but it's just not the most ideal situation. Nice little shotgun here as well. Keep pushing up. This is Asia, did about like 30 pips on that. Range was quite big as well. There's like 176 pips. But yeah, I mean, if you look at this, you kind of gotta know like what I mean. I hope if you've been trading for a while, you see you're gonna be able to understand different perspectives, even if you've not been trading TFX concepts. If you just understand price action, I feel like you're gonna know what I'm talking about here. This is a lot more spread out too. A lot more spread out. So you see like a volume is starting to come in. Volume is starting to come into the market. So it's opening up a little bit better as we're seeing prices move and ranges being filled. So it's not stuck in a situation like this. Because a situation like this, there's not a lot of hope for this, because there's not a lot of like ranges to trade. A situation like this, you also got that resistance right there. But in a situation like this over here, you have a lot more room to move. You know, if you just understand that simple concept, then that's going to be what keeps you out of like trading on days which are just not good days. Where you can recognize that, and if you're planning on taking like a bigger risk, you're going to be like, okay, so this is maybe not the play. This is not the day for such a risk like the one I want to take. Just that simple concept. Very powerful stuff. Very powerful stuff. You just gotta be able to spot it, and it's really not that difficult to spot. Just stick on one time frame, preferably the 5-minute time frame. You're gonna be able to see through the jaggedness of price action. Because every day it's, you know, it's same but different, right? Same but different. Because markets just move down, sideways, and bullish. So all is gonna be the same, slightly bit different day. Maybe the context is what changes, rather. The context is different, but the technicals always more or less are the same. So ideally, it should be moving down. If it was gonna break below that support, it was either gonna look for that liquidity grab to keep moving up, but we can already sense and see that's gonna be very difficult for price. So if it does it, like, awesome. But technically speaking, if it starts to close below levels, starts to break levels like that, it should be moving down, in my opinion. You know, that's the whole point. That's the whole idea. So that's why I say, like, if there's no shock in the water, then ideally, then price should do that. But you see that pullback here? You got maybe some profit taking off the lower time frames. Remember, there's also other market participants involved, so you're gonna have some profit taking, potentially off the LTFs, causing these reactions, and also could be the market mopping up some traders, because for sellers to commit to this, it's still a bit scary given that the daily bias is bullish. Overall, gold sentiment is bullish, So it could be quite scary. The buyers could be trying to scare out or short squeeze right over here with this push up. And obviously this is kind of like an inception move to the downside, which is it's also a counter trend move, right? So the confidence levels might not be the greatest, right? As if, you know, you take a buy like this and you're trading with that daily bias, you have much more confidence level, a higher confidence level than you would have someone like that, right? So it's always like a game of psychology. Like trading is a much of a game of psychology. So whenever you pick a side, whether that's going to be like a buyer or a seller, you got to see like how confident are you in that market. A bullish market, definitely you're going to have a lot more short squeezes actually play out, a much more bullish market. So you'd rather be on the bulls team. Because if the trade is good, it's good, right? Even if it pulls down, we had this happen to us, I think it was like maybe 2 weeks ago on a Tuesday. Or it was the last week Tuesday or like the week before that, where like price came right at the stop loss area and then it went into my direction because of like the confidence level as well. Like it's a long squeeze, right? The market was trying to squeeze you out. It was testing you. It was testing, hey John, do you believe in this move? I'm gonna come and test you right there. I know you graduated, but I'm gonna come and test you. I'm gonna come and test your stop loss. See if you're gonna close out of fear. See if you still got that fear in you. You know, and then it's gonna come test that area and then it's gonna go in your direction. There's the same exact thing that happened, like literally like every time it trust me, in the market, if it happens once, it's gonna happen again. So if you're a losing trader, it's gonna happen again. You're just gonna keep losing. It's not gonna change. No amount of funded programs is gonna save you from that one fact. If you are a losing trader, you will always lose because you're doing something in the market that is wrong. I don't know what it is. You gotta figure that out. There's something you're doing that is wrong because the market is going to repeat itself over and over and over and over again. And if you're a winning trader, then you're going to keep winning, but you also have to be able to adapt as well, you know, to a certain volume. More of like the volume you have to adapt to, not change your strategy. But if you're getting a lot more pushes, you're gonna try and find a way to adapt to that volume. Just the same way as a surfer would use a different surfboard surfing a mega wave than they would just a regular wave. You know, you still got the technique. You can still surf, but you use a different tool, different approach slightly. All right, so you can see the same situation happened here. Came testing that area because, you know, very well refined strategy that we use because the markets are quite efficient. There's no need to be exuberant with our stop losses. That's just unnecessary, especially when we're already refined. That's the whole idea behind refining, is trying to like really curve out the edges of what you don't need so it's as powerful and as good as it needs to be, or as good as it can get. So just like a good swordsmith would, same what you would do in the market with your strategies. You find a way to refine it, just shave off what you don't need till you get the final product, where it's like, okay, if you keep shaving, now you're only going to be more detrimental to that point because now you're making it weaker. Right? So you want to find that like solid balance. And as you can see, same thing that happened here with the market. Really likes to test those areas. It's very efficient, chat. And look at this, even our 60K mark here. Look at this. The market is very, very efficient. Don't think it's random, especially you see this volatile volume moves. You say, oh, you know, this is gambling with a small stop loss. It's not gambling. It's gambling to you because you have not done the refinement work. Of course it's going to be gambling to you. Of course. Have you seen like Gordon Ramsay, how he can flip with his wrist the food, like when he like throws in the air like so naturally? But for you, if you don't have that technique, you're going to like throw it all over the place. So of course it's going to be a gamble for you. You know? So I think that's the only thing. It's always a matter of getting good at what it is that you do. That differentiates one person from seeing it as risky and another person from seeing it as safe. It's always how good it is. You know, motocross to me looks hella risky, but when I see a guy do a backflip on a motocross, you know, for him, it's his perspective of risk is quite different because he's gone through the trials and tribulations to get to that point. A lot of you haven't gone through the trials and tribulations, still waiting on the easy thing, on the easy results. But easy results just don't come naturally in any area in life. So just find a technique, stick with that technique, and get better at it. Also, provided that it is foundational concepts of how markets operate and not fugazi stuff. Because fugazi stuff is going to have you in this industry for the next 5 to 10 years losing money. While executing trade, do you wait for candle to close or impulse entry? Not necessarily. If we can get a candle to close, while executing trade, you wait for candle to close. Now, most of the time I'm going to impulse entry. Yeah, most of the time I'm going to impulse entry. I'm not going to wait for candle to close. Because sometimes you wait for that candle to close, you're going to kind of like miss your move. But sometimes, in rare occasions, I will wait. So let's say, for example, sometimes I was thinking about doing that as well here, but you see, we got triggered in quite quickly. But I'm always looking at the timer over here. That's where my eye is always, especially right before execution. I'm always looking at this timer and looking to see, as well as down here, to see what candle is about to close. But on stream, you can see it up here. It's 4:44. So I know 4:44 in about 40 seconds, we're going to have a new 5-minute candle open. So if we're next to a execution point and I see, you see it's like 44, 30 seconds, new 5-minute candle is about to open. So if we're next to an execution area and we're not yet breaking, then I'll try as much as possible to hold myself from executing on an impulse. So you got like a few seconds here, we're about to get a new 5-minute open. So that's what I was waiting for this candlestick to do. Because I think we had about like 2 minutes left though. So it's already breaking in 2 minutes. So I just impulse entered it. Because I know with gold, it can just leave you. Right? But you see, if we had more time to wait, best case scenario, it's usually just wait. Because the next 5 minutes would typically open. You would create the lows. Let's say if you want to take a buy, you create a low and then reflip. That bottom wick and then reflip. And then you can avoid the low probability of variable that could have stopped you out of your trade. You know, that could have started. That was literally like what happened on my position here with a new 5-minute open. You see, you still need to create a new low. So it created the low, still survived the trade, but that's kind of what you want to be cautious of, because see, this trade here could have triggered me in and then waited for the new 5-minute open. Then the new 5-minute open is going to be a much deeper retracement. So if you have the luxury to wait, I would say wait. Definitely that decision is made within a time span of like seconds, like a minute, if you're going to wait or not. Also, like how good the trade setup is. You know, sometimes you could wait, but you know that, damn, the setup is so good that you don't want to miss out on it, you know. It's like also based off the market context at the moment. But for a move like this, I would much rather have preferred to wait, but I didn't get the luxury to wait. Because, you know, price was already up close to about like 100 pips already. So what's the probability? Okay, it's in like 90 pips. What's the probability even of a 90 pip move that we would still get price moving up, you know? But it still managed a bit more, about like 30 more pips. It's just not as what do you call it, like, doesn't make you feel so safe. But sometimes that's the way trading is. All right, look, I'm coming to 65% now, just filling up the range currently. Yeah, sometimes that's how trading is, right? It will push your limits. That's the thing about the markets. The markets will test you. They will push you and see, like, it will push your fears. It will test your fears. We'll see like if you can really execute. Because sometimes those scary trades are the ones that you should be taking. All right, every day is gonna be a test. Some trades are pretty easy. Other trades will require some what we call like cojones. It require you to have some cojones, but you know you must execute because your trade is telling you to execute your trading plan. You know, but that's the thing. Your trading plan gonna tell you one thing, but your mind is gonna tell you another thing. And then we always like to listen to the mind because it's gonna feel like safer, but that's fear. Sometimes, you know, fear has kept us as human beings alive from very dangerous situations, but it's sometimes even more dangerous to not do anything. You gotta break through that fear and start getting good at making those types of decisions. Like, those are the real game changer decisions. The one you really break through that fear, and you gotta be good at making those decisions, and then you execute on those ideas. Those are the game changer moves in your life. Today was one of those days. Out of a whole week, maybe we can say 20%. Maybe let's give it a range. Maybe like 20 to 30% of trades are gonna be like that, kind of more like fearful, like where you're kind of like, oh, I don't like that, and then you miss a move. And let's say like 20-30%. It's still quite significant. Out of a whole week, taking like 1 or 3 trades a day, it's still quite a significant number. So typically what actually helps situation like that is to always focus on to the daily time frame, right? Because sometimes price moving in a certain direction, that can still kind of help push you over the cliff. Sometimes you need that push. You need that push, and that's what the daily bias indicator is for, which you can download in the description box. That's the whole idea of it, to give you that push, because 20-30% is quite a lot, where you're going to need those cojones to really execute. Like, some of you probably wanted to execute on these sells, but for one reason or the other, you didn't. But you can see price has calmed down. It's filled up the range here, or at least down towards like 65%. There's still a bit more room for it to move, continue moving down towards that next point by 5k. Remember, 5k is like a psychological mark now, and that's for me what I vision the markets to do. I feel like everybody gonna kind of see the market in their own reality. For me, my reality is this kind of movements like this, so most of the time this is kind of like what I get. I think also because we all look at the same charts, but there's a funny way the universe works. Like, you will see your version of reality as well. So if you're seeing FEGs, if you're seeing other things like this, you will never see what I am seeing, even though we're all looking at the same chart work. Correct? Hey, what's up, Frederick? What will you do if price moves 20-30 pips? You move your trade to BE already, and then price hits BE. Oh, you mean like if I was in a buy and it stopped me out and then skyrocketed 20-30 pips? Then it is what it is, right? It is what it is. Because why did I not secure the 20-30 pips? By that time, the whole idea is when you're going to put your stop loss to break even, you're accepting the outcome of a break even. Most people who put their stop loss to break even are going to have their stop losses get hit, like maybe, most of the time they're going to get hit like 70%, like 60-70% of the time. That stop loss at break even is going to hit. That's why some people, they're never going to move a stop loss to break even without securing something. So when you're going to put your stops to break even, also look and see if you're securing something or if you're just accepting that break even outcome. That's all that it is. Because now you're going to have a winning trade potentially go into a losing trade when you put your stops to break even. Because the market sometimes is going to need to breathe a bit more. So yeah, I think that's what I would say. Just accept the outcome. Accept the outcome, because I feel like it's even better to break even than obviously take a loss. So what's gonna hurt you more? Is it going to be the outcome of the break even, or is it gonna be the loss? Which one's gonna hurt more? I think like a break even will hurt less than having a winning trade, a complete winning trade, go into some kind of a drawdown and then hit your stop loss. Like having a reaction off the 65 now. See, back wholly, I would have been close at BE then dumped. Yeah, this idea of radically shorting that sell and TP is honestly relaxing. The trade hits and ends pretty fast. Although I like it a lot. It even feels more radical now because of how big the candles are. But trust me, like a 20 pip stop loss in 2023 or 2024 would be below the 5-minute candles. I think that would look something. See, right now it looks quite small there. But I think with normal volume, it could probably... This is a pretty fat candle though. This is a big 5-minute. But it would look a lot wider than that. It would look a lot wider, like something like this, covering a lot more of the candle body. Definitely not normal times. It's just a lot harder for someone to conceptualize that idea who has not been trading since 2024. So if you just recently started trading, it's... this is definitely not normal volume. Candle inflation, yes. I see. Sell here, it did have that reaction, I guess, from 65, but it blew through it to just completely fill it up here towards 5K. Do you think it'll test the Asia low? Asia low is by 49.64. Asia low is quite a speculation. That's more of a speculative trade. The Asia low. We don't speculate.
We don't do that here.
Price is moving up, you know, like the daily time frame is still moving up bullish. So I would rather have seen it to break this range and then move up to like 5200. Because the daily is bullish, but you see the daily is not bearish. Daily is not bearish, so I don't know about the Asia low. I think there's a lower probability, especially it could do it, you know, I don't know. This anything can happen, but a price has so much support levels here to get through. This is why I prefer being in and out of the market in short durations of time and just trading with a daily bias. It's a lot more simpler to understand where price and what targets are going to be met. Like this, it's like, you know, anything can happen. We just have to wait and see how the price progresses. I feel like this will be more clear to us, like once we get to New York session. If we start like taking out lows like this and we see that price starts to move down, because the pre-session was actually quite bearish. Like the pre-London time. So maybe this could have just been like a very strong retracement to the upside to mop up orders from the previous Asia session sellers to continue to break lows and then move down. So you see like during pre-NY open that were like, let's say below 5K, 5,000 psychological mark. I would say at that point, there's a much higher probability then given the way the price is progressing, we're going to come and retest some lows over there. We're heading to 5 a.m. Eastern. Then in 1 hour, it's going to be pre-New York. FXM is back. Oh, nice. We're gonna get some gaps in there. Yeah, the charts look so different here. It's on the 5 minute. Nothing too appetizing on US 100. I think it's in a really big range. It's a range bound index here. Range bound index, which is actually a good time to get involved if this is not investment purposes, this is not investment advice, but it's definitely at a bus stop right here. Question is, what's the current outlook of markets right now? Are we expecting like any major dips? I remember this was a market, the market crash, that major one where Warren Buffett got out of. Right over here, it created like incredible opportunities for people to get involved because that was such a big dip right over here. I think when it looks like something like the market, you're always kind of looking for those kind of dippy opportunities, you know? Those dippy opportunities are always the best. That's what we would say, like, buy the dip. You can buy the dip, right? It's like, you see it's in a valley here. Price comes down and then it's within a valley to continue to move up bullish. You get very nice premium prices over here on those retracements. Right now it's at a bus stop. It's a little scary in a situation like this, but I think like a break of the high would be a much better idea instead of just getting in like right here. Say if you're planning to get invested in the US 100, whatever, it'll be much better to see confirmations that price can actually want to continue to move upwards. Because if you get involved here, it could still dip quite aggressively. But if it re-breaks these highs, it increases the probability that maybe this has just been the pit stop that price can continue to move up from. That's on the weekly time frame. It's similar situation or a similar kind of model of thinking to, you know, some of those sort of like Bitcoin was. See, you know, Bitcoin's moving up over here. So you have this little valley. This is where people made a lot more of their money on these little valleys over here when we hit 15K. Getting stuck in with some confirmations, TetraFX confirmations to move up. There's a nice little range over here to fill on the weekly and monthly. All right, but as it's moving up over here, let's say you miss the initial trade to the upside. You got the smaller pit stops right here and right here. But you see, given the context of that market as well, this is a very good market conditions for BTC to keep moving up bullish. All right, so you got to see as well what's happening with the stock market currently. I'm not privy with that information because I don't trade stocks, but it's it's in a very interesting situation, Naz. All right, now for a lot position holding right over here. Oh, look at this, we're breaking 5K now. Yeah, we're literally weakening today. Something with gold, we're weakening now. We're taking over 5K. So you see, if we respect 5K throughout the pre-NY to New York Open, most likely come down to retest some of these levels here on the left hand side, because now we see with our eyes, not what we feel, that price is moving down. And if we can take over 5K, we're going to see that price can keep moving down. But if we respect 5K, then I would say this is the main stronghold for the buyers. You got to take a lot of pride in 5K if they can hold 5K. If they can't hold 5K, then at that point, there's not really much holding price action beyond 5K. There's no really psychological marks at that point. So maybe the just sellers take it down as far as they can. This would actually be the Asia Open would actually be the last point in time where you had some kind of a structure. As you can see, like previously over here, you have like a small little break and a retest situation that initiated that move up into that next range that we got. So that would actually be the area of most interest, I would say, for the market, would be to come and retest the Asia lows at that point. Filling the 1 hour range. They got a bit of 1 hour range here. It's true, but like 145 pips. Hourly range to the 4 hour. Like a 4 hour support. Even the 4 hour range got filled to the upside. This is that daily resistance right there. That's the main thing, like for the week up ahead. If we're gonna see further upside on gold spot, this is the main thing that we actually need to get through. Just like 50.86. Get through 50.86, I think we should move up quite nicely. But I hope it's not a week where we're just gonna range. Like if we're gonna range, then maybe we got like support over here. LTF will still have enough volume for us to trade, but overall it could get stuck. Even if you look at the fundamental work here, it says gold likely range bound amid raft of US data, and we got NFP on I think I saw it on a Thursday, but it should actually be on Friday. But what is it? Non-farm employment change. Oh, we got it on Wednesday because of the government shutdown that there was. So that got postponed, so we're gonna get it on Wednesday instead of Friday. But we still got a bunch of red folders for the week. Retail sales, NFP, and core CPI. So those could be driving factors towards even why we're getting this gold likely range bound. This PA. A lack of a fresh catalyst amongst other factors are likely to constrain the yellow metals upside. And if you notice, like throughout January we had fresh catalysts like literally almost every weekend. Almost every weekend, and the freaking weekly candlesticks were opening up and just moving up bullish because of those catalysts that we had. But you see, now this time around, it's kind of different, right? Like, what do we have? Trump made a video with Obama looking like a monkey or something like that. That's not going to move the market. But that's currently what's flying out there. You know, it's nothing to do with tariffs or geopolitical tensions. That's like the most recent thing that I've seen, at least on my end, which is not going to move the market. So we got a lack of a catalyst over here. Lack of a catalyst to move price. The USS. This initials, the USS. Like when you say crisps. Crisps. And American English, you gotta say chips. But British English, you gotta say crisps. But that extra S. Crisps. I'd say a consumer payroll, consumer price index report due this week could serve as triggers for near-term volatility. For traders, managing position size is more important than betting on direction. Oh, gotta manage your position size over here. Portfolios is more important than betting on the wind, he says. Yeah, gotta manage your position sizing. It's not the time to be betting on the wind. I think if you're gonna bet on the wind, then you gotta wait for the wind to blow above. Maybe let's see on the daily, refine that edge a bit more. Yeah, right here by 1596. Then you're gonna bet on the wind. And I think then the wind can keep blowing towards 45, 55. Yeah, we're gonna have some tailwind over here, and I think it's gonna be pretty good for the higher time frame and position size traders. Trump just having fun with AI. I actually feel like he didn't do it. You know, there's something about his reaction that it made me feel like he didn't do it, because he definitely has a team who manages things, but he also wasn't mad about it. And he didn't apologize about it or anything. But I don't think that he did it. But of course, he's not gonna apologize for that. Obviously. Now he said it himself. Didn't Trump say that? If you watch an old documentary with Trump, he said when he was much younger, never admit defeat. Right? Never admit defeat. And you can see Trump is always the type of guy to be very optimistic about things. Everything is going well. Everything is amazing, which is also really good. But he's also not the type of person to admit defeat. He said, never admit defeat. Right? For me, what I say is never apologize. Because when you apologize, it means you did something wrong. You didn't do anything wrong. You just learned a lesson. Just don't do it again. And in the market, you never want to play a victim. So let's see. Trump's philosophy: no matter what happens, always claim victory and never admit defeat. I like that. This is literally like the market will mold you into the person that you need to be. Like I got molded in this sense where I was losing every single session, and no matter what happens, always claim victory and never admit defeat, because I knew I was gonna lose that day. I knew I was waking up to the charts to lose money. So I switched my mentality completely and said it was going to be a win. Like every loss is going to be, even if I take a lose on stream, I'll say awesome trade, amazing trade, and I'll move over to my next trade and then do the same thing over and over again. You know, some of the streamers, they might going to take a loss and they're going to start playing the victim. They're going to start crying about it. Man, never cry about it. Say that was an awesome trade. That's a victory right there. Maybe you're going to learn something, maybe not, but you just keep it moving. You know, because that's how you survive in this game. You can't let certain things get to you. If you let those things get to you, then it's going to be a short-lived experience, the entrepreneurial journey over here. Because you do need the entrepreneurial mindset to be a trader. Even if you don't believe trading is like entrepreneurship. Some people say it's not. I think it's the most purest form of entrepreneurship. Other people don't think the same. But in any case, you still need that same mental model to survive. See, it's just come out by 5k. We still haven't gone through that 5k mark, but it just tapped it to fill the range. It's actually quite a similar situation that happened. If you actually look at this move up here and this move down here, you can see the similarity of how it just wicked above and then pull down, how it wicked below here and then pull up. Correct? Like you see, like even during different time, you got one time here, different time here. But you see the market is still intertwined in a sense as it's just moving, because maybe sometimes it's like it's okay, it's very paradoxical. How do I put this? Damn, like some of these concepts I feel like it's very, very difficult to put into words. Let's just leave it for now. It's not gonna make sense because it's gonna sound quite paradoxical. Just keep it simple. Just keep it simple. We got a range fill from here to here. That's it. Same way we had a range fill from here to here. Yep. So Goldie is setting up again. It's setting up again. Path of least resistance should be to the upside at this point. I feel like the downside move is also going to be quite difficult because it's basically been put in the same. You see, market loves path of least resistance. You see, I moved from here, like hit that resistance point, and then start moving down to fill this range. Now look at where we currently are at. Again, we're in that same situation. Same situation. So where's the path of least resistance? It should be up. You know, it's not 100%, but it's a higher probability. And also daily bias is starting to flip over here. Oh, well, that's the indicator. But yeah, it's still going to take a lot of work to get through that level. Yeah, this is it. Thanks. Thank you, Architect.
After you with a knife. Attack, attack, attack. If somebody comes after you with a knife, you shoot him back with a bazooka. Okay? Rule 2. What is truth, Tony? What is truth? You know what's truth? What you say is truth. What I say is truth. What he says is truth.
To the victor goes the spoils. It's the winners in history who write history.
What is the truth in life? Deny everything, admit nothing. You know what's true? What I say is true. And third of all, the most important, no matter how fucked you are, you never, ever, ever admit defeat. You always win victory. Attack, attack, attack.
What stopped you from entering 5K zone with a decent SL? Just my rules, man. I already made money here. The thing is, that's not even part of my strategy to enter when we hit the 5K mark. I just know that price is moving towards that 5K mark from here to here. That's all that I know. Anything over here is kind of like a random, because sometimes we can break through that area, you know, but this is all that we know, that price can move from here to here. So you see, that's why I even started to get much larger pullbacks now. A little bit more push to the opposite direction. I mean, people can try like to do the entry at the targets. I think it's quite interesting, but the problem with that strategy I found was a stop loss placement you have to see, because I'm not sure if we can get that to be consistent. Because you even get a tight stop loss. I don't like where would be the best place to put the stops. But we've seen these reactions happen over and over again. There is a probability of that bounce, which is a pretty high probability. The issue is how to get in. Are you going to wait for like a candlestick pattern, or is there some specific area you can put your stop loss that kind of gives you like an edge to trade that system, for example? These are questions that we just gotta, you know, ask ourselves whenever we got a new idea like that. But you see, we got a resistance right over here by 50.15. And we got another resistance right over here. It's by like 50.27. We got a range now by like 86 pips back up there. Secure 36 SMA as support. TetraFX concepts. What's this? Nice little buy. There's a buy from earlier. WWW. Yeah, that was a good trade. Saw that one happening at the break of the highs here. The fake out situation, trading with the daily bias. It's always good. It's always good to trade with the daily bias if you can. Especially throughout the earlier sessions. So yeah, W trade Momar. Let's see, 2% start of the week. That was beautiful as always. Quick move, forget to take before short idea was 15-minute faking out with long wick breaking above. Oh, nice clean range over there. I think you're a higher time frame. This is oh, this is a 5-minute. 5-minute V-shaped reversal. That was taken during the Asia session. I can find it right here. I think he took his trade. It was literally like right here. Very quick. Easy. Boom. You took a buy at the break of the high. Very nice. See on the 1 minute, anything interesting? Nice little breakout situation. Oh, not the cleanest. Oh, wait. Actually, no. It didn't even break properly here. So it's like slightly got through the wick, but not like a solid break. Pull down. Basically, that's a psychological thing the market sometimes does. It will come like really close to a section, not break it, and then pull down. But you trigger because you feel like, oh, we're moving so fast. Surely we're going to break it. Then it never breaks it. Sometimes you got to be very careful about that situation over there. I feel like you kind of get away with it more often I've seen with short positions. When you do end up taking a sell, you do get away with it a lot more often. Well, the buy positions, not as much. Yeah, let's see. Nice little buy over there. Break of the highs. Amazing. Win is a win, sir. A win is a win. But yeah, now we're rejecting a bit here by 50-14. 50-14 rejection. It's getting ready. It's conjuring up the next move here soon. Man, I just love the way I trade. It's simple. It's simple and it works. You got distribution phase, you got setup phase, distribution phase, setup phase, distribution phase, setup phase. And it's always like seeing how can you catch the area that you're in, point A, point A, point A. Can you even first identify it? And then can you then catch it? Right, and I see the TFX triangle over here. See, that's my logo. It's my logo down over here. There's a TFX triangle. The triangle of love. Triangle of love and profit. Of that cycle, that market cycle. How it always repeats itself. That's what it is. This is what it is. So now we're gonna wait. And we're gonna see what happens. But I assume it's gonna be something like this. Candlestick is gonna try and break above and then go out towards like 50-28 mark over there. It's a nice range. Really, you see, we mopped up the range from here to here was about 213 pips. Here to here was about 182 pips. Actually, like 5k. No, I mean, sorry, 200 down to 5k. 212. Now we got one from here to here. That's roughly around 85 pips left over there to scrape up. So we're gonna see if it's all a matter of entry confirmations, whether you're gonna get one or not get one by 50-15 or wherever the breaks are gonna be. But it should be moving up if we break that resistance. Also got a nice little liquidity grab confirmation down over here too. You're at the bottom of the range, another confluence, because overall market is ranging. So you're also back down to the bottom of the range. The range highs are up here. We got 5,000 liquidity grab. A lot of heavy lifting to the downside for price to keep moving down if it wanted to move down. There's a lot more heavy lifting down there. So yeah, I think if you get some kind of an entry confirmation here, that would be good for price to keep moving up 80 pips. And I think that would be awesome. And then, you know, that's what price has got to do. That's what price got to do if it's respecting. Because, you know, some days you're not going to get price respect price action. But I feel like overall, provided you don't overtrade, candles do what they're meant to do. You know, it's just a question of like, how do they do those things? Sometimes, you know, you still get your trades to play out, but maybe there's a bit of a shock in the water. Maybe the retracement was a little deeper than you thought it would be, you know, but it still filled the range. So sometimes it does it without much of a fight. But sometimes it gives you a bit of a fight. That's what we call a variable, right? That's just like shock in the water. That's a variable. But if that variable did not exist, trading would be a lot easier. But I think even then people would still fuck it up. That's the thing. Trading can literally be as easy as range getting filled all the time if there's never going to be a shock in the water. But people would still fuck it up. I promise you that. There's this one guy in Wall Street who says, like, even if he goes to the street and gives someone his strategy, most people are still going to fail with that strategy. There was like a famous trader who once said this, you know, because of just like the human complication of what we do, how we love to complicate things. I think it just comes with experience, honestly. I think there's a natural humbling the universe has to apply to everybody, depending on where we currently are at. And it's like, if you're gonna notice that sooner, then I think you're gonna break out of that level quicker, and it wouldn't be as hard looking back. You're gonna look back at it and say, man, that was right under my nose the whole time. Why was that so difficult? You know, it's like, it's a mental blockage. And then you get to the next level, and next level, you're always gonna look back and say, that was not as bad as I thought it was. Correct? It's the same way as, like, if you're gonna bungee jump off a freaking bridge, in the beginning, you're gonna be like, okay, you know, kind of scary, and then you do it over and over again. It's not as bad. It's just getting through that barrier, whatever the case may be. Bungee jumping, that's fear. Something like trading that's very information orientated, that's arrogance. Sometimes it's the arrogance that's keeping the walls up. You gotta like attack each devil the way it needs to be attacked. So obviously with fear, you just have to push yourself off the bridge. With arrogance, it's just quite difficult, but you really have to change your mental model to how you perceive things and what's possible and not possible. It's a much difficult one. That's the one that keeps people stuck for, heck, you know, they say the graveyard is the most richest place because even a lot of ideas went there to die. You know, maybe just that arrogance, just not allowing you to follow through on some of your ideas, can be the case. So what the demon it is, everybody's got like a different devil that they're dealing with in the market, right? It's gonna be fear, it's gonna be greed. Those are most of the, what do you call it? The common ones: greed, fear, rushing, process. So it's just a matter of reconditioning daily your mindset. I think what helps is actually audiobooks. That's what used to help me. So every morning as I used to go to work, I used to listen to an audiobook. I would try and get through as many audiobooks as possible. And at that time, I found a way to get free audiobooks. I used to download audiobooks from a website. It's called wait, I can't say it here on YouTube, but you can get like a website where you're going to download all the audiobooks and just start that conditioning process. It's like when you're going to put conditioner on your hair. You know, you got to put conditioner and you got to let it work so it makes it soft. So that's the same thing with like audiobooks. You're just consistently having that thing in your ear telling you about how successful people think, how you should be in this world. You know, that keeps you on track because it's a very lonely journey, like trying to better ourselves to an extent that most people don't. It's very lonely. So having that comfort of knowing that people are out there putting in the work, it makes you feel good. It's the same thing that when people go to the gym, you know, like when you see other people gymming, you kind of feel good, right? Because you see other people putting in the work, in a sense. You know, it's kind of the same idea. But you see, with success in this sense, there's very few people who are going to want to take that journey. It's a road less traveled. So you have to somehow, you got to make it a little bit more comfortable for yourself. And that's the reason why we have this community here. You know, we have this community, but remember guys, you make the community. I don't make the community. You make the community. So if we're going to create a community, you have to put the work in. If you're going to want mentorship, you got to put the work in. And I can't do that because I'm a single person, you know. The community is built by a great number of individuals. But you see, we have the platform here. It's all about just utilizing the platform to your fullest extent. And, you know, everybody kind of does their part. Everybody kind of does their part. But, you know, we got amazing results over here. People are doing amazing. So I do appreciate the chart work that's been sent. Very, very nice. I see the improvement. I see the vision. And gold is starting to come down. Now we're starting to tumble below 5K. Now we are coming downtown. Let's go, Goldie. 527. We're approaching a pre-New York session soon. In 30 minutes. Holy.
Why are you running? Why are you running?
It's heading to your buy limit. I'm in danger. The guy from what was that show? Simpsons. I like that Discord always has all these gifts. That's how you sounded like right now. It's coming to my buy limit with a sweaty emoji, that's you. I'm in danger because you know you're counter trending. You saw that dip. That dip come down quite heavy. So what are you gonna do? Are you gonna still buy it, or has FX Vic Mensa talked you out of a trade? And then if you're not gonna take the trade, now you're gonna blame FX Vic Mensa. Then it's gonna be a vicious cycle over and over again. So what are you going to do? But yeah, it's coming down here. That was a big dump on the minute candle. This minute candle opened and then dumped like 100 pips. That was a bomber clot. 100 pip drop on that minute open right there. 120, close to 120 pips. I know you wanted it. Well, it depends on how you wanted the buy to be activated, the buy limit, right? That's why I don't trade like this, because the market condition shifts by the time it's coming to that area. It could be a different situation, because the market could be, let's say you want to take a buy here, but the market was consolidating for so long, by the time it's triggering your buy limit, it also has to move, so it can just go through that level. That's why I don't typically like to set limit orders. Rather just go with our market execution or even a sell stop or buy stop, because we're going through it, right? We're going through it and we're moving with the market. So there's always two kinds of traders in the end of the day. I think the opposite day traders, and then you got the ones who just go with the market. So leave in the chat if you're an opposite day trader, or you go with a. If you're an opposite day trader, put a 2. If you go with the flow, put a 1. Let's see. There's quite a number of traders are opposite day traders, I would say. Like, just generally speaking. Only two kinds of traders. You're either going with the market, like as it's going, you're going with it, or you're an opposite day trader, that it's coming like this, and you're like, okay, so we're gonna buy when it comes there. I mean, the market, there's no other way you're gonna execute. That's why you got a buy stop or a buy limit. Those two options. There's no other way that you can get in, I guess. Either you go through it or you go against it. So that already is a foundation. Very important foundation to look at. It's very important, because for the most part, I'm gonna lie to you, the most part I lost a lot was this opposite day trading thing, because also your level of experience is never great enough to there's just no foundation. It always feels a bit loose. Like, what I used to do was just leave an order like that. Sometimes I get these amazing entries, obviously, but most of the time you just kind of leave an order and then go about your day and see if you just get triggered, right? And then see how that progresses later. Which for me, I don't know. I guess people trade that way, but it didn't work for me. Stock rises, chip sector rebounds. I tend to be opposite, but I learned to ride the wave, even though the opposite trades feel more juicy. Yeah, opposite trades can do that. Those pullbacks, they can feel very nice. It's a psychological thing as well, right? You feel like when you get like stuck in properly, like, you hit like for example, a BTC at 60k move like this. Ooh, something about that just feels different. You can feel like the same move, but it goes in your direction. Like this, like we get 0 drawdown trades even on this trade that we just took. But yeah, something about that just feels a bit more like you outsmarted, right? Like you just kind of like quickly outsmarted the market. Even as opposed to, you see with our trade here this morning, we just had like 0 drawdown. Okay, we got a bit of drawdown, but basically 0. It's a psychological tickle. Had to delete my stop at 15. I feel also in terms of a tighter stop loss, you're kind of in risk because you know the market is going already against you. So if you're coming to take a buy, the pressure is already to the downside. Right? The pressure is to the downside. So sometimes you see like how we saw gold here. I think it dropped like, how many pips was that? That was quite a lot of pips in just like a matter of a second. Because the volume is heading towards that. Because like objects in motions tend to stay in motion. So if it's moving down, sometimes you get these really big spikes. Just like on the buy that we had. As it was moving in our direction, we got a really nice spike towards the upside. But it's usually harder for it to do that spike on the opposite direction. That's how you see even sometimes our tighter stop losses, the pullbacks, we still survive the pullbacks. Because I feel like it's like a momentum thing. Because as much I've been trading tight stops like my whole career profitably, for as long as I've been profitable, I've never had a situation like where, let's say all of a sudden I'm in a trade and then it spikes through my, even if I got 16 pip stop loss, before I used to have like 5 pip stop losses because an average candle on a 5 minute was like 10 pips. So I couldn't even have as low as a 5 pip stop loss, which is quite hilarious looking back at it right now, because that would be unheard of. And it used to be below structure. It still would be below 1 minute structure. You have 5 pip stop loss. I think you could even go as low as a 3 pip stop loss, honestly, because that was the market structure that we used to have. Nowadays, you cannot even think of doing that. You know, very, very difficult to get away with something like that. But the idea was like, even then, I never had a candle, let's say all of a sudden do like 100 pips against the position, like in 1 second. Because obviously you can't manage that, right? It pushes you, maybe you're gonna lose like 2, maybe even 3%. If you're managing properly, maybe more. If you're risking 2%, you lose like 4%, maybe 6%. But that never really happens. Like even when, the funny thing is, like the last time we took a trade was like a GJ trade. There was news coming out on GJ, but there was an entry confirmation. Let's say about 20-30 minutes before the news dropped. It still pushed in that direction like properly, even with the news. So I don't know, somehow it just never happens. I think that's a fear that I had to get over when I started using tighter stop losses, especially on gold. You know, because people are fearful of gold as it is. I imagine telling somebody to use a tighter stop loss on gold. Especially if you don't know what you're doing, then you're going to put yourself in that position if you don't know what you're doing. If you don't have the proper requirements to be getting in safely. But yeah, I mean, that's the thing. That's when you're doing the opposite way. I experienced more of that doing the opposite way though. Opposite day. But hey, that's just me. Everybody's got their own journey, I guess. Like, I really wanted to trade opposite day style, but it never worked. Let's see right now. Price is kind of like setting up over here. It broke down below 5K. See if the buyers can take over 5K again. It's flirting with the idea of a daily flip though. Doesn't take that much. I think, did we already get the daily flip? Should have been right here. Yeah, we did already get the daily flip. Daily already flipped once. It's flirting with the idea to sell off. We got a resistance here that we need to get through. Especially the way we can get through it here on a Monday, because you see the daily candle is still a doji. It's still, volume hasn't head out anywhere yet. Daily resistance being a doji. So this is what we call then that indecision candlestick pattern. Again, people are going to use this as a way of reading PA when you look at Japanese candlesticks. But when somebody says I'm getting in on an engulfing candle, I just laugh nowadays. Because that's how I used to lose a lot of my trades, was waiting for candlestick patterns. Engulfing candlestick in a Fibonacci zone or some of the sort. I started realizing over the years that Japanese candles are a good way, especially like a few of them. Like the doji, I think is quite nice. But when you overcomplicate now Maribatsu and all of these other things, a pregnant woman, shooting star, morning star, evening star, I feel then you're kind of losing the plot. But the only Japanese candlestick which actually stuck with me was the doji. Because the doji, you know, when the candle closes like this, it really does signify an indecision in the market. You know, it's very simple, especially when we're looking for those breakouts. because that indecision is basically what a consolidation is. So, you know, it kind of makes sense there. That's what you're seeing happening here on the daily time frame as well. That's why the candle is like this. So we are just moving sideways inside this daily overall, minus all the noise that will be seen on the intradays. We're just moving sideways predominantly. You can see on the 15 as well. You can kind of see that doji right here. See, it's quite simple, right? It's a very nice way of reading price action. Would you guys agree? I think you just have to get used to the idea that we're not trading fair value gaps, because a lot of people trade fair value gaps, so they can't see anything beyond that point. So if you're new to the stream, that's kind of what's going on here. We're not trading fair value gaps. That we're not trading smart money concepts. We're not necessarily trading smart money concepts. That's also very complicated jargon. You know, you're gonna learn some of these things where you're gonna have a lot of jargon. You know that you don't need the jargon. Like if you watch a lot of ICC streams, you cut those streams, you can have such a short video. A lot of it is just storytelling and jargon, and then overcomplication with certain things. It's all designed to make you think that it's smart money concepts, but it's not. It's not smart money concepts. It's actually almost laughable. I would love to meet a person who works at an actual hedge fund and ask him what they think of retail traders and their smart money concepts approaches to markets. They will probably laugh, because anything that we do here, if we're not doing any manner of due diligence and not looking at any sort of macro fundamentals which actually move the market, there's no such a thing as a smart money concept. Maybe we got an idea of it, like a liquidity grab, sure. Correct? Like that what we see, and that actually plays out really good for us, technically speaking, when we do it as traders. That's the whole idea behind my buy this morning as well, was that we had a liquidity grab here before price started moving in my favor. You know, those types of smart money concept and quotation are pretty good. Pretty good, especially when we couple that with the macro fundamentals and why gold is moving in a certain direction. It's pretty nice. We're getting close, but it's never going to be truly that smart, especially when you're just doing it off technicals with no real data or instruments, like the Bloomberg terminal for one, which I guess it's just one of the many tools that's being used. And Bloomberg terminal is pretty cool. You can even, like, they got a Craigslist on there where rich people selling their Porsches and all manner of things. You got contact details, you got like a Craigslist or like an eBay type of thing. Like purely networking. Oh, you can like track oil tankers as well. That's also pretty neat. You can track oil tankers. You can track wildfires. You can see how a wildfire in one part of the world can affect something like corn, you know, and how that's going to affect corn. You could track wind patterns in confluence with the fires. If you're trading oil, you can see your oil tankers. You're going to see if your oil tanker has been held up somewhere. You know, maybe that's going to affect oil supply, and that's going to have a domino effect over here in this thing that you're trading. You know, how amazing is that? It's pretty cool. But you see, you're never going to do it. No retail trader is ever going to do that. That's a lot of due diligence. It's quite expensive as well. And you'll find out that it's an unnecessary cost for a retail trader to be paying $25,000. I think it's what, per month for a Bloomberg terminal. It's an unnecessary. It's actually a throw of money if you don't really know what you're doing. It's just a waste of money. So in the end, when we strip back all of that, and that will take time. That usually takes people time to understand this. You know, for me, it took me, you know, much shorter period because I was really trying to sift through every bullshit that I can. But it takes people time to get back to the foundation. So then you start to realize that you just got to stay on your lane. You know, just focus on what the market gives you. If you read candlesticks, yeah, we're good at reading candlesticks and price action. So focus on that. That's all you get. Focus on that, mastering emotions, and making sure you're executing without hesitation. That's all that it is. But there's a level of losing, and everybody has a different threshold to that. Like how tired they can get of their progress. Everyone got a different level. Some people still need to, you know, go through a few more times, and then it gets really full. Then it's like, okay, you get to this point in your journey where it's like, all right, I gotta pour the cup out, right? Have we been there yet? Have we been? How many times have we poured the cup? Because we keep it full. We keep it really full. But you should have to be okay like pouring even just a little bit of the cup out, like daily. Right? Don't always keep it full. There's always room for growth and getting better every day. Don't be afraid to pour a little bit of that cup out. You know, slowly but surely. Slowly but surely. You see, given the right amount of time and the right amount of pouring, you eventually pour the whole cup up, but you're building it. As you're pouring, you're getting rid of bad habits, but you're also replenishing it. Keeping some of them, but you're also replenishing it. So it looks like it's always been like this, but secretly you have been getting better. The cup has been filling if you do it from the opposite direction. It has been getting full like this with much better habits. But, you know, some of us, we can't do it. So what happens is eventually we got to pour the whole cup out. Right? And then we got to start again. So I think it's a good habit to always be able to be okay with a learning. If you got to learn something new on the stream here today, like put that into your journal right now. Put it into your journal because it's going to happen again tomorrow. Whatever it is new that you saw here on stream today, whatever it is that you think, put it in your journal. It's going to happen again. So at least you will be prepared for the next time that happens. This thing is coming down here towards the Asia Open. Just needs to dip a bit more. So I just read that 60 to 80% of all trades are made by computers and AI, and the vast majority of traders are high-frequency microsecond traders. Another reason for tighter and tighter SL and TPs. There's an edge to that lower time frame trading. They go as low as yeah, you said microseconds. The hell is a microsecond? The microsecond are looking at ticks over here. But yeah, the structure does move. You know, funny thing is when we got TradingView Premium, I'm a bit of a brokey guy, so I can't afford Premium, unfortunately. But you know, when we had the seconds chart back in the good old days, then we could see that the same price action was playing out, just like when it was playing out on the higher time frames. It was playing out on the lower time frames. You know, it was amazing to see. We're getting like these inverted head and shoulders, and it happened so quickly. You know, because just getting second. Every candlestick is closing literally like every second. And it was still respecting structure. The only thing is there's a lot more false signals. Okay, so the false signals on the seconds chart is what people on the higher time frame think the false signals are on the 1 minute chart. So people who trade like a higher time frame, they got a slower way of perceiving markets. For them, the 1 minute looks like a seconds chart. That's how they perceive it. But little they know, the 1 minute and even something like close to 5 minute is very closely tied together. And even from the 5 minute and above is much, much closer as well. Because you see like 5 minute ranges. Look at this whole, we got 1 minute entry confirmation. All this kind of like lining up perfectly with a good amount of candles, because you still need to wait for structure to build, which will give you equivalent to a higher time frame, like maybe a 5 minute above in any case, even though you're on the 1 minute execution. But you see it builds up into the higher time frames. So from the 1 minute also looking at to see where price can go. Here you can see how it builds up into the higher time frames, as far up as even it can go up to like a 1 hour, even the 4 hour. You know what I mean? So the 1 minute is really not that bad, provided that you're using a significant amount of structure. But if you're just trading candle by candle, it can give a bit more of the false signals. But if you're waiting a bit longer, it's really good. But on the seconds chart, even waiting longer, sometimes it just feels so unpredictable. You know, it's so fast and so unpredictable. It is crazy. You can't even like trade it. I don't even know somebody who trades. Maybe like Valentini trades a 10-second, if I'm not mistaken. I think it was. The amount of times I said 10-second in that video. I think it's the 10 seconds chart. Yeah. Fabio Valentini. Yeah, I traded a second that chart. We traded a 1 minute. But you see, this is creating a little reversal play here below 5k. You can see the buyers are really trying to like push this thing back up right now. They have created some kind of a support over here. You got support, you got resistance, you got clean range. Candlesticks start to break through that zone. You're gonna have roughly about 144 pips. 144 pips to the upside. In and out? Yeah, in and out. In and out. Hey guys, I'm in. I saw a reel about it as well. This one guy is a scalper. It's like, all right, I'm out. Then he's got a buddy who's a swing trader who's just lying around the house all day. Just waiting. I'm in, I'm out. It is scary how this marketing follows you across apps. I was watching a video like the other day on how to make, I want to see if there's a different way of making a peanut butter and jelly sandwich. If there's another way that exists now that I'm not privy to how to elevate a peanut butter and jelly sandwich. Bro, I was watching that on YouTube and then I was on my phone and then it started showing me reels about peanut butter and jelly sandwiches. How wild is that? It's normal now because we've accepted defeat. Everyone's like, okay, you have my data anyway, so it doesn't make a difference. So we all just accept. But I remember in the beginning of this whole thing, there was like a huge controversy behind how they because that's how basically you buy shit. You know, you look at a motorbike and then somebody's driving that motorbike on a reel and then all of a sudden you're seeing prices for the motorbike and before you know it, you bought the motorbike. It is quite interesting. So what else are they controlling? To what extent is your daily life being conditioned? You know, that's why they call it programming during the USSR era. That's the whole idea behind television, was not so you can watch Netflix, was it can brainwash you to thinking in a certain way. So you watch programs, you know, so that's been elevated. And to what extent has it been elevated? You know, some people can't live without Netflix. You're going to ask someone, what are the 3 things? I want everybody in the chat right now to write down the 3 things they couldn't live without. Let's see what it is. It's going to tell you a lot about a person. Someone's going to say Netflix. And don't be shy to say Netflix. It's okay. It's okay to say Netflix. But what are the 3 things you could not live without? You're going to see how deep in the matrix you are. Phone, Wi-Fi, and air. Phone is a given. Actually, your phone, you cannot live without your phone because you got to work on your phone. Yeah, phone is definitely up there. Jesus Christ, the Bible, maybe. The Bible is pretty good. Pretty good characteristic to have in there. You got your phone. You got a... What else you got? Phone, gym, and what would be the 3rd thing? Can't live without my gym equipment. Like, okay, I could, but I can't live without gym. Can't live without my phone. I'm not gonna say laptop. God knows what else. Probably sun. Need that energy like Superman. Superman gets charged up by the sun. That's why Superman is so much stronger. When you get like these other Kryptons come into Earth, they're not as strong as Superman. Because Superman's been harnessing the energy of the sun for a very long time. So I think, yeah, you gotta have sun in there. Phone, gym, and sun. That's it. Prayer, family, friends, good health. Yeah, this thing's setting up here below 5K. 5K, it's getting ready. You see, it's warning the sellers right now who came in here. This was also a really nice head and shoulders. Right here, left shoulder, head, right shoulder. It's currently warning the it's warning the sellers right over here. It's warning the sellers. It's warning the sellers. It's getting ready to pop back up. Caught Asia opening long. Very good. I caught the Bitcoin dump here by 60K. Look at this. 1 to 11 risk reward. Nah, I'm just kidding. I wish. I was watching this thing fall on if you're following me on Instagram. We are watching this thing fall here on the... That was on a Friday? I think it was Friday, right? This is, yeah, on a... Was it a Thursday? One of those days. We're just watching it come down. It's like nicely coming down here on the weekly time frame. To fill the range. I don't know why it says Bitcoin is below 60K. If you look at what's been written when you see these news events, let's say BTC. I don't know why they say 60K when we're still above 60K. Bitcoin narrowly avoiding falling under 60K. On my Instagram, I kept saying like this kind of propaganda that, well, Bitcoin was under 60K. What crashed Bitcoin? 3 theories behind BTC's trip below 60K. Bitcoin wiped out below 60K. Bitcoin narrowly avoids falling. Rebounds back above 70K. But we can dig into this a bit more. So you go here on BTC. On-chain data shows that 388 million in Coinbase loans may be liquidated if Bitcoin drops 30%. Total liquidatable loan across Morpho users could hit 515 million under the same conditions. Coin shares noted about, okay, current quantum tech can breach BTC's encryption. Let's see, Bitcoin, Ethereum, XRP fall. Why there's hope for crypto rally? Wow, look at this. Delusional. Need some whips over here. Who needs whips? Bitcoin was mounting a tentative recovery, a slowdown in price. Declines extend a weekend rebound. I feel like, you know, you gotta read into a mind of a cryptocurrency guy, and every time it dips more, they're gonna say, this is the best time to buy. This is the best time to buy. This is the best time to buy. Following a sharp fall that plunged the cryptocurrency to near 60K. But why is it always the best time to buy? You know, why? Why? The stock market doesn't even move like that. You're lucky to get a dip in the stock market, then that's the best time to buy. Right now, if you look at US 100, that thing is still accumulating, ready to keep moving up. It hasn't even dipped at all. But Bitcoin's always dipping. The price of Bitcoin was down early Monday. Ethereum, the second largest cryptocurrency, was also down. Last week falls were tied to a broad sell-off in US technology stocks. See, now, however, it seems some investors viewed sub 70K BTC as a renewed purchasing opportunity. Alright, so let's see. We believe a case can be made that much of the bear market pullback is already in the rearview mirror, making risk to reward attractive. Alright, so if they believe much of the bear market pullback is already in the rearview mirror, then what we need to see, you know, is for price to respect that 60K mark. Because now if you go on the monthly time frame, if it does not respect 60K, it's curtains for crypto completely over here. Especially we start breaking retesting from the intradays, from, in this case would be the weekly daily. below 60k, and then we still find that resistance over here, man, this thing is gonna be even potentially back down to 25k. As we've already seen, the market loves to fill ranges. As you can see with gold right now, it's still setting up. It's still within little accumulation here below 5k mark. So if something like this happens on crypto, I imagine this $5,000 here being the case below 60k on cryptocurrency, on Bitcoin, sorry. Right? And it doesn't re-break the high to give the reversal play. Then it re-breaks the lows. There's a pretty good chance that that thing is going to come down quite heavy. You might be looking at 50k mark over here, 50k. Once we get to 50k, that's half of the targets that they wanted to have this last year, which is 100k. Right? But we even blew past 100k. But now imagine coming all the way from 126 all the way down below 50k again. Then you're going to look at this chart here. And it's going to be literally the same thing that happens every now and then with cryptos. Let me show you this chart. This chart is so perfect for people who are going to trade cryptos, even Bitcoin. So you're going to have anxiety. You see euphoria is at the highest point. Anxiety, denial, fear, depression, panic. This is capitulation. Capitulation. Oh, damn, that sounds horrible. Capitulation. And then dependency. Damn, there's even like words here I can't even read. Never seen these words before, but that's what they're gonna feel there. They're gonna feel despondency. Damn, all that comes before depression? Holy, how bad is depression? These sound a lot worse. Capitulation, dependency. Man, I'd rather be depressed than capitulated. But yeah, that's where Bitcoin is heading, I guess. If we can break below 60k, we should be heading down towards depression over there. But right now, I think it's currently at a fear or denial. Is it denial or fear? Maybe denial, right? It takes a lot to break a cryptocurrency, guys. Belief in the endeavor. It does take quite a lot. Those guys are quite stubborn. So I think we are in denial phase, and that's literally how the market looks at them. It gauges their emotions and then plays with them. They're in denial. If we break through denial, that's going to be fear. That's going to be below 60k. Below 60k is fear. 60k still sounds not bad, right? 60k, not too bad. Not too bad. Break 60k, fear is going to come in. 50k, depression. 40k, panic. 30k, capitulation. 30k, dependency. 20k, depression. So that's going to be my crypto analysis here. So we got to wait and see if we can break below 60k. If we don't break below 60k, then there's no trade. There's nothing. Now I got to look and see on the daily where we're going to be potentially heading to the next, if that's the case. 20k debts. 20k write off, man. Just write it off. Never touch it again. You see, now it's breaking the highs. So this is what crypto needs to do. If Bitcoin breaks below 60, it needs to do something like this and then re-break the highs. Because if it does that, this is going to be a range here that, you know, price can fill that range. So we're going to remove this analysis here, and then we have resistance and this area here. Potential. So this is where we're at with gold. Got potential reversal by 5k. If we can take over 5k, psychological on that entry as well, which is quite nice. It's quite a nice confluence. 5k is lining up a potential wick breaks entry. Right over here. That'll be the buy, but that'll be the buy side target. right here. Now that range would be just about 100 pips. 100 pips to the upside. If BTC comes down to 24,900, I'm cooked. That's my liquidation price. Oh, 24,900. Thank you for sharing, Kraken. Now I'll make sure to put in a good word with Bogdanov. Yeah, dump it. Ever watched that Warjack series? Bojack. Warjack. Bogdanov. Bojack has his liquidation by 24,900. Okay, compete. It's gonna hit 24,900 exactly. This is what's gonna happen. It's gonna hit 24,900 exactly 24,900. Not even a pip more, and then it's gonna skyrocket to 200k. Now that you've said that, because the institutions are watching the stream, right? That's what ICT says when he loses a trade. That the market is watching the stream. The market makers. Imagine going to Wall Street and on their TVs, instead of looking at prices and all of those things, they got all screens for live stream traders. So you're gonna see all the live stream traders over there. See, this thing is starting to gear up now. It's flirting with the idea to break 5k soon. Getting closer and closer. Oh, we're gonna read this article here. Key takeaways. One popular theory suggests that Bitcoin's crash this past week may have originated in Asia, where some Hong Kong hedge funds were placing substantial leverage bets that BTC would continue to rise. Morgan Stanley caused Bitcoin to sell off. Suggested that banks, including Morgan Stanley, may have been forced to sell BTC or related assets to hedge their exposure in structured notes tied to spot Bitcoin ETFs. Oh. I thought it was because they said the real guy who created Bitcoin. Remember, there's a rumor spreading around that it was actually Epstein who invented Bitcoin. So that was also one theory of why price moved down, I suppose. I don't know if that was a joke. But you know, I don't know if it's like super far-fetched. Like Epstein helped a lot of powerful people get away with a lot of shit. And something like cryptocurrency is the whole idea behind, you know, why we have cryptocurrencies. Just to help criminals get away with things a bit easier. If it wasn't for cryptocurrency, I think what's his name? Andrew Tate there would be broke. Because you know, where are you gonna put your money in? You can't put your money in a bank. You know, a bank's gonna seize your money. Maybe you're gonna keep your money in an insurance company, like offshore insurance company in a safety deposit box somewhere. That's the only way I can think of actually keeping your money. But most insurance companies like that don't even allow you to keep money inside of them for legal and obvious reasons. So where do you keep your money? If somebody gave you $1 million right now cash, where are you keeping your money? Very difficult question, right? Where are you going to keep your money? I was watching Uncut Gems yesterday with Adam Sandler, you know, where he was sells a lot of jewelry in New York. And in the end of the movie, he made $1 million. And the woman walks out of the casino with $1 million. They bet on a basketball game. What are you going to do with $1 million, chat? Where are you gonna do it? Are you gonna put it in a bank? You know, and then you gotta pay. Then you gotta pay tax on it as well. You gotta pay like wherever you're from. You gotta pay 30% tax, 30, 35, 40. You know, you're gonna do that. Even the bank might ask you where you got the money from, and you gotta prove where you got the money from, and you know, just gotta have that fear of a potential freeze of the funds, or you pay like a lot of tax on it. So what options do you have? Are you gonna hide it? You can't hide $1 million. Paper is gonna degrade. Where are you gonna put it? In a wall somewhere? Very difficult problem. You see, the thing with movies, they ideally leave that part out. They never show that part. I think the best thing to do actually would be to invest. I was thinking, because I was watching the movie and I was thinking, what is this girl gonna do with $1 million? Probably run for the ocean somewhere. But I think the best thing to do with like $1 million, like start buying properties, physical assets. That's the only thing that you can do with money, is you gotta have to spend it. You just have to buy property, you gotta buy land, pay in cash. Yeah, buy physical gold slowly with cash and put it in a vault in your home or a safe deposit box. It's a nice problem to have. To randomly win $1 million. See, miners shifting from Bitcoin to AI. VVS. And you're using my name. That guy was in that movie as well. Uncut Gems. So it's just kind of waiting over here. You see, like, price is just waiting. Once it breaks 5K, we should see a good reaction. Yeah, this guy was in Uncut Gems. Where's the audio on this thing?
I3, 14K, and
Nigel Houston. Oh, holy! What the hell was that? Was this recent? Bro, I've never seen Nigel Houston bail like this. What the hell? Sorry, my bad, guys. Is this guy dead? I've never seen Nigel Houston freaking bail like that. What the heck? This must have been recent, bro. This was posted 2 days ago. Holy! That's the worst freaking bail I've ever watched. Like, legitimately, this is one of the best skateboarders in the world. And that's the worst bail I've ever seen. And he went straight out cold. No one's even saying anything. Everybody's quiet. Wow. I did not expect that. I was trying to show you a different video. New fear unlocked. Bro, the crazy thing about the skaters, they still go back there. They still go back there. They're gonna break, they're gonna almost die on a spot, and when they recover, they're still gonna go back there.
where's my fucking money? You say VVS, I3, 14K, and you're using my name!
Everyone has seen this viral.
Yeah, Goldie's really, really. You know, when price stays long like this for a long time, you can imagine the amount of volume that's building up here. that's about to get distributed too. Like the kind of breakouts that you're about to see as we're heading up towards. Oh, this is pre-New York. Yeah, this is already pre-New York time over here. Wow, volume that's potentially about to come in here. Potentially something of the sort. I would say gold here is still technically trending on the daily. It's up 0.55%, but it's in a very crucial area. See, as we're approaching a new session time, there's also a different vibe to the market than it was when we were trading. Obviously, like London session moves different. This Pacific time also moves differently. So we got two options here. Potentially, it's going to actually break above the highs. It's going to move up, or it's going to break the lows. Potential sell-off below there. And then maybe attempt to go for the Asia lows. That could be another outcome. When skaters in momentum, they stay in momentum. Yeah, I'm talking about tracks. Or, yeah, I guess another way, buying gold and giving it to the bank to store it. Then lights inheritance from your parents. Another way is if you hold a trust. So if someone gives you $1 million, I think another way you can hold that money is in a trust. If you got to do it with your lawyer, but you could put the money in a trust, and then technically they should not be able to access that money. Have you ever wondered how Andrew Tate remained so rich, even after everything that happened to him? Because they raided his mom's house as well. You're not hiding crypto wallets, cold wallets in your mom's house, or they raided his mom's house. You're like very smart with your money. Pablo Escobar used to dig holes in random areas and put the money inside random holes. You see, that didn't really work out too well. There's probably a bunch of holes in where have not been discovered, with like rotting money in there from Escobar. Money is a big problem. You don't know how to invest money, you don't know how to treat money, you're gonna lose it. Just the same way as in the market. If you're over trading, if if you have these same old habits most people who are not financially literate are gonna have, you don't have to be smart to make money. That's why people with a lot of money don't know what to do with money, and then they lose the money because they're not financially literate. It's a whole different skill set. So that's why you got to really limit the amount of exposure you give yourself in a field where you might not, or let's say in trading, I think the best case scenario is always just to limit the risk anyway. Because intraday trading is a lot more riskier. You're going to hear Warren Buffett even say it himself. He says, intraday trading, Warren Buffett, is gambling. But if you're a long-term position holder, then you're never going to be worried about what happens on a day-to-day basis. If price is down like 2%, 3%, whatever. That's what Warren Buffett says. So even just going off that, you already see how important it is not to overtrade. Even though it looks easy sometimes, it's not easy. It's the hardest way to make easy money in the long term. In the short term, you can get away with it. It could be easy money, but in the long term, that's where you get caught. And that's where, again, Warren Buffett said, put a cop on anybody's tail, eventually they get a ticket. All of these things that he says. Warren Buffett always says, when the tide goes out, you're going to know who's been swimming naked. So I think, all these important things that people say, you got to really, really listen. Yeah, price is still accumulating. There's a minor accumulation here. The breakout might even start from this area. You might start to see some of the sort. Like, I still anticipate it could be a potential reversal, but it could also sell off. We're going to break these lows here and then continue a potential sell-off below like 49.82. Timberino, let's go. This is how the sellers right now should be feeling. Like this guy from Simpsons right here. Once we take 5k, you can expect that pullback should be quite deep. Should be quite deep for them to take out like 5k over there. I really just want to see what's gonna happen, because it hasn't triggered anything much. The market right now, as you can see, is consolidating. It's a variable, right? It's a variable if we break 5k, whether that's going to fly up, which it actually should, or if it's going to try and do some sketchy behavior. You never know until after the fact, right? You just gotta wait. But ideally, it should just break and then move up. Also, the setup itself looks quite clean. I do like the fact that we broke below that support level right there, especially at a key psychological mark like this. A very nice lineup, you know. That's like you know, the whole idea also behind what a confluence is. A confluence is just when a couple of things like meet together in the middle, right? So that's what we get over here, which is quite a strong confluence. That's psychological numbers lining up together with entry confirmations. It's quite interesting how that even lines up in the first place, correct? Like, think about it. How did that line up, that 5k mark, exactly with that entry confirmation? How is that even possible? How? Exactly with the entry confirmation it lined up. Because you see, it's not like swinging through the level. It's breaking it and then setting up right under the level. So you see, the market feels this as well. So if you're not using psychological marks in your trading, you have to start looking at the numbers right over here. You need to start looking at those numbers. Back in the pits, that's all they even had, really, was just the numbers. It's flirting. And it goes. And it's gonna be that cycle is gonna repeat itself again. It's gonna regenerate. So once it gets its first its payoff right here, if it does end up giving that payout, then it's gonna need to regenerate. See, there's a lot of waiting involved. It's gonna do its thing. Ideally, we should see it push up. I'm kind of marrying a buy bias, I've noticed as well, because it could as well just do this. You know, that could happen as well. But I guess because we're closer to the buys, it would be nice to see if it could trigger that reversal, see what the outcome is. Doesn't mean you have to trade it. It's like monitor it, because you know, sometimes when you're just watching price like this, you're kind of like learning a lot from it, learning a lot from your own psychology and how to approach it. Right now, it's moving quite slow. It's quite it's quite easy to get into a trade like this. Whereas the first trade we took this morning, you saw that happen quite fast. There was a lot of volume and activity in the market during that time. But you see right now, it's kind of died out. But that activity should be coming in soon. Once we break that 5k mark, you're gonna see it come back in. You're gonna see the traders back at the desk. In a sense, that's how it's gonna be. It's either gonna be a liquidity grab. Remember, it's not 100%. You know, and don't dislike the video because you know you either can take a winning or a losing trade. I'm explaining to you the way to think in probabilities. All right, so just thinking in terms of probabilities in itself will allow you to remove your emotion away from the outcome. That's what you want to do. That's how you make money. You can't make a money being a crybaby all the time. You know, you just sometimes gotta look at it from what it is in terms of probabilities. You know, so if it breaks these highs by 5k, there's a higher probability it's going to move up to 50-10. So every time you're gonna speak to yourself in your head, you gotta think like that. You gotta think there's a higher probability that when I took this trade, it was supposed to move up bullish. That's all that it was. So now you wait. Now you wait, you sit in your hands, you see what the probability was, and you say, okay, awesome. So today I was so happy to be able to be so patient and spot this move out here and take my trade and do what I needed to do with the trade, and I didn't mismanage it, and I already anticipated all the bullshit that the market can do to me. There you go. Now the buyers are coming in. And I took my trade and it was the way it was supposed to go, and I think it was a pretty good day, and I followed my rules. If I said I was going to secure 16 pips, I secured 16 pips. So I said I was going to secure like 20 pips, I secured like 20 pips. I did what I was going to do. I put my stop loss to break even when I was supposed to put my stop loss to break even. I followed my rules, and that's all that it was. Right? Awesome. Now this is going to play out. It's going to set up, and that cycle is going to repeat itself. All that this is just an opportunity. It's only given, in fact, it's already been pushed quite a lot. It just looks small here on stream if you're not measuring out. So that's why I was going to measure out for you. It's already pushed up 35 pips, guys. That would be us again, in and out. I'm in and I'm out. I'm in and I'm out. All right, guys, I'm in. All right, guys, I'm out. That's it. That's all that it is. I'm in and I'm out. And it's still got room to keep moving up over here. We got about like 67 pips. And all that it is, it's just an opportunity. You've just been given an opportunity. Think of it as a blessing. The market has blessed you with an opportunity. And a very simple one at that. You know, whether you took it or not, it's still the understanding which counts. You know, you don't have to be a hero and try to catch the whole reversal. You just have to make money. You're given an opportunity. You took the opportunity. You got what you got. And that's it. There's no what ifs. Oh, what if I had left a runner? Oh, this or that. You know, what if you held longer? There's no what ifs. A lot of the time when I have these trades, you also think that I feel bad that I don't hold my runners because of look at how much that they run over here. You know, you'll say, oh, what if you held that? See, look at that run over here. Or look at the sell-off over here. What if you held that sell? You know, what if? What if does not exist in trading. There's only what you did and what you got. Correct? There's no what ifs. You know, look at this. Oh, what if? Imagine this, chat. What if? Because I hold like 2% of trade. What if I held this? You know, what if what then? What if? There's way too many what ifs. I think what you got to do is sometimes you have these trades which run really, really easy in your direction. And those are like bonus profits. So, you know, I made like 10% over here on this buy. And that was like a bonus profit, because price was just moving flawlessly in that direction. So it's a lot easier to hold. You see something like this, you just take your trade and you call it a day. You see, that's all you got to do. Just a small piece of the cake. But we know that price can move up. And if it moves up, awesome. If it doesn't move up, whatever. You already got your slice of the cake over here. Yeah, it's a pretty good slice. It moved around. Let's see from the entries realistically. How much would that be? About like 42 pips. It could have been easy, especially if it was a 1 minute trade. 1 minute trade risking like 2%. I would have made like 2. Let me calculate this. That's about, how many pips was that? 30, 38. Pretty flawless on that too. Flawless victory. So let's see. 38 divided by 16. 2.37. 2 times 2.37. Could have been a nice like little 4%, 4-5% move. I'm in and I'm out. Little 4% move, 5% move. Don't really need much, because all you got to do is find that opportunity, execute on it, and come back and do it again. It's much more stress-free than over trading. If it moves, it moves. You know, these rest of the moves, they typically happen because the market is not always moving in just one direction. Like where you get this next candle, then continue to go up. If it does that, you know, amazing. But the way the kind of market actually operates, the more profitable way is for it to have some sort of retracements here and there. You know, so this natural progression of price, it still didn't mean that it was going to fully reverse on you, correct? That's when a lot of the fears and talking out also comes in our heads when we see candlesticks move down. It just depends on how you're trading it, because it's still in the progress of it trying to continue to move up bullish. You know, so that's kind of what you want to remove, is that uncertainty from, because you know where your entry is. A lot of the time people are going to struggle with the psychology after the entry, like what to do, like how to manage that emotion after the entry of price just going in your favor or stopping you out of break even and then going in your direction. There's a few things that can happen there. That's, I feel like, what people are going to struggle the most with. But maybe up until getting to the entry point should be quite simple to understand, so you can better refine that emotional part later. That trading psychology later. So if you're still finding that happening to you, definitely this week that's going to give you an opportunity. First, master the entry models or what you're looking for, because that should be pretty straightforward. It's more mechanical in that sense. And then comes in the psychological part, where it's going to be a little bit more open-ended, you know, because that's what you are. Very complicated being. Got a lot of complications happening there. So you got to look at those complications and you got to see like how can you manage those over complications, those complications. Everybody's got their own problem. You know, maybe too many break-evens, too many mismanagements. Just got to look at that. And then at the same time, couple that with not what you wish would have happened, but what price was doing and how price moves. See how price moves? It retested that level right over there. So now if you got a trade to get out of break even, or even let's say you try to trail your position and you're not happy with your results, couple that experience with the way price naturally moves. And that's how you got to prepare for the next time, right? The next time. So whenever you have a trade and you secure profits and let's say it kept running up, you got to tell yourself, I'm okay that I secured profit because I know that these fluctuations are what can give me like a stress-free day, not becoming a stress-free day. So if I want to have a stress-free day, price moves my direction, I secure something, awesome. You know, because I know I cannot control the outcome or whatever happens beyond the point of entry and then TPs getting hit to where we're expecting reversals. So you make the best possible decision that you can make at that point in time. So that way you can remove all the what ifs out of your vocabulary. And if you want to have a running trade, learn how to leave runners. Practice when is the best time that you're going to leave a runner. Okay, see this range here has now been filled and it's still currently getting filled. I think we just hit about like 65% of the range. It's still getting mopped up here. Still on the way up. You see, this is why we said that these sellers right over here, they're going to be in a bit of danger. Right? That's why we said these sellers right over here, they're going to be in a bit of danger if they don't manage their risk, because now the probability has increased that they're going to have like a winning trade, maybe even become now a losing trade. But that also gives you an advantage, because let's say if you haven't taken a trade, now you know where the market was coming from and where it's potentially heading to. So that puts you in a very interesting position too, to execute on a trade with a much better probability, correct? But it only works now if you understand where we came from, how the concepts work, and then that's it. Then you just take it. You take it and you got to let the market work for you. Because it's out of your control. Once you get into the, you know, it's like when you're in an airplane, it's out of your control. What's going to happen next? What if you're going to make it there or you're not going to make it there? You know, it's out of your control. The pilot's going to say if you're going to make it there or you're not going to make it there. So you got to sit and trust the systems in place that you're going to make it there. Correct? Otherwise, you're going to be in the plane ride the whole time. You see like people who fly always holding the chair and like leaning back so uncomfortably and stuff. Either you're just going to be that guy. So you got to take it. You got to trust your system and then let it play out, because it is out of your control. Profitable traders cannot control the market, right? We just execute in high probability areas and let the market play out based off the data that's been collected. Some people like to set and forget. If you got a much bigger stop loss. If you're scalping like the way we scalp, you can't set and forget. The time you decide to hold is the time you lose it all. And then that's it. That's all that it is. That's all that it is. We've showed you so many times now. Leave a 1 in the chat if you're locked in. If you see it, leave a 2 if you're still confused. Let me know. Let me know. Remember, this is a two-way street. Oh, one. All right. Nice, nice, nice. It's a two-way street, guys. It's a two-way street. Anywhere I go. Only two ones? Oh, some of you guys are watching this like Netflix. 156 people here, only 2 likes. Some of you watching this like Netflix here. Oh, that's okay. That's okay. I know you. I see you over there. You're washing the dishes, and I also see you over there lying on your couch. You don't really have access to something you're gonna type on. You're watching this on a TV. I see you. Just relax. Just keep watching. Oh yeah, we should be back. Mm-hmm.
On that beat, going crazy.
All right, we should be good. We should be good. We should be good. Hey, what is it? Yeah, I see now it's like pushed up. It's pushed up to resistance over here, so it's gotta set up again. So it's gonna like, since it's in motion, we have another resistance point right over here. Resistance point right over here for price to keep moving up. It's gonna be roughly about 90 pips. Like properly mop up the rest of these sellers right over here. It's good. So that's the first pre New York. That's a pre New York trade right here. That's a pre NY trade. Pre NY breakout. It's slowing down quite a bit though overall. Throwing with a 5k. It would be good for gold on the daily time frame to take over 5k. Because see the daily candle still kind of small over there. There's not a lot of movement still in the daily candle. So what I anticipate is probably waiting for the New York session New York session to open up to start delivering some more direction. It's most likely what it's doing. Right, very nice PA today, I have to say. There's really not there's not really shocks in the water. Most of the trades I've seen, like even the counter trend moves have been playing out. Then delivering the amount of pips that we typically secure. So it's a pretty good day. Pretty good day here. No shock in the water. It seems there's a network problem all over the world lately. So, I mean, it's internet's undersea cables, so that's the thing about the internet, you know, those undersea cables, they typically get tampered with. That's the thing with Starlink, where Starlink has, or satellite internet has an advantage, is even if there's not that opportunity for tampering with. Starlink is connected, but even as those satellites are connected, even if that similar freaking cable gets cut or whatever happens, the satellites can still communicate with each other via Bluetooth or whatever system that they use. So this is the advantage. The problem with satellite internet is it's never enough to give a whole city internet. It can only provide portions of the city with internet. So that's again like capacity issues. You know what I mean? Capacity issues. Also, there's physical constraints. Because a satellite can only be a certain altitude above Earth, right? You can't bring a satellite lower than that. Physically, it's impossible. It's not going to work. Whereas fiber optics have cell towers. Your satellite can never be the same height as a cell tower. So that's another challenge. So there's connection problems there, but or like speed, maybe speed or connection problems, like, but that physically does affect the performance of the general internet connection. But yeah, I don't know what's going on here around the world. My internet just sometimes acts weird. See, we got anything else? Stocks rise as chip sector rebounds. Investors focus on key US data. Unprecedented solar storms hitting this week also. Oh, a solar storm? That could just wipe out the whole human race. Yeah, like a proper solar storm, like take us back to the Middle Ages, you know? Yeah, now we got the buy side target here. Has been fully met on this move. Very well done. Let's go, boys. Anyone who secured on that move, anybody who just even learned about the trade and understood why it played out, you know, I still think that's pretty nice. You gotta teach a man to fish, can catch fish all day long, right? But if you feed him with fish, what's he gonna do when you end the stream? He's gonna do nothing. Now, I think the next point here is going to definitely be about 50-15. That's going to be the next point of interest to see where price can move. Daily on BTC is getting ready for a drop. Most likely this Monday is going to be a heavy bearish candle on BTC. So you're probably going to see this candle. If you're going to be trading BTC over here, just continue to move down. It's already down about 2%. You got some nice clean ranges over there. You got that nice little kiss of death on the 8 SMA. Also holding the candlestick down bearish. As Goldie here is still trying to make its way on upwards. Kind of ignoring US 100. Let's see what US 100 is doing. It's currently bearish. US 100, it looks like if it's down bearish already 0.23%, it's not really trending. But it might be looking at that support here by 24,938 to fill that range. Like 36 pips to the downside. And it's also got a resistance here. If it breaks above that resistance, maybe we can see price start to move up again. It's going to be another 44 pips. But that's what US 100 is sitting at, or NAS or NQ, whatever you call it. It starts to break below here, then there's a probability with the daily time frame it can start to fill that range. Market loves filling out ranges, especially when it's sitting at an area for such a long time and then eventually starts to push. So the market loves to do that. Coming down by 24,940 over here. See the buy side target? This is when we know that price is going to have a reaction, but we don't know if price can continue to move beyond that point. We don't know this. It's got to reject this area completely, or can it continue to move beyond that point? Let's gotta wait and find out here. All you gotta do is just wait and do it again the next day. That's what I'm gonna do. But I'm gonna see y'all tomorrow. I hope you all enjoyed the stream. Hope you learned some value here. Adios. Good luck.